Visit the same ancient monuments, lay by the same dolphin-shaped pool, meet the same Barrys and Sandras, and wear the same Hawaiian shirt that you'd never wear at home. Then maybe it's time to switch it up, starting with the all-new Vauxhall Corsa, with its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
We are just about 7 minutes before the opening bell. Let's bring in Slatestone Wealth Senior Market Strategist and a CNBC contributor, Kenny Polcari. Kenny, good morning. Obviously, you and I, everybody looking at this kind of relentless rally. It's orderly. It is really not really given a chance people to buy dips and pullbacks. Only question is, has it stretched a little bit too far, or can you bet that it keeps rolling?
Listen, I thought it stretched a little bit too far 2 weeks ago, right? I mean, I've actually been expecting, I thought 3,300 was going to be where we actually hit resistance. We tried it a couple of times. We backed off, and then yesterday we blasted right through and landed solidly on the other side. And again, this morning, look, the markets are up again. Global markets are up. China came out with a fairly decent report, right? Although they're saying 6.1 is the slowest in 27 years or whatever, the fact is it is growing at 6.1 in the middle of what was this ongoing trade war crisis that was going to bring the global economy to a halt. It's done nothing like that. And so now we've got trade 1.0. We've got China growing. We've got robust U.S. economic data. You've got great earnings so far. And so, the sky's the limit.
So in other words, a lot of the stuff we were worried about seems like we didn't need to be worried about it. Right now, we're almost up 3% year to date for the S&P 500 if we open right here. Most of the strategists out there were saying, we're probably only good for about a 5 or 8% full year, and we're only 2 weeks in. So what does that mean for the dynamic, people trying to either chase it or upgrade where they think this market could go? And also, how do you treat the first pullback whenever it does come?
So here's what I think, because I'm in that camp where I really kind of thought this year was going to, if we got a 10 to 12% return all in, right, once you add in dividends, total return, I thought that would probably be about where we are. And you're right, we're already up 3%. We're not even done with January yet. We still got another week and a half to go before the month is over. But I think you have to, it depends again on who you are, right? You're the long-term investor, you got to stick with your plan, right? So whether it's consistent investing, monthly, quarterly, set, however you do it, you should stick with that plan and eliminate the noise around you. Look, when you just asked me, we were all concerned about all these issues going forward. But in fact, we were concerned all of 2019, and the market just kept going higher and higher and higher. It never really pulled back, and it doesn't feel like necessarily today it wants to pull back either. That being said, when the market does pull back, I think there's going to still be plenty of demand. But depending on the speed at which it does, remember, it's all algo-driven, so the buy side will back off a little bit. They'll let the sell side come in. The market should shake the branches a little bit to get everybody to see where everybody stands. But then I think the market's in a very good place.
All right. We'd be in a good place if we shook out a little bit. Kenny, thanks a lot. Good to see you.
Yeah, you as well.
Shakeout does not look like it's going to happen at the open. We're looking for some record highs. Opening bell's just a few minutes away. Don't go anywhere.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
I've got my own place now, Money. My parents put up the 10% security. And when I keep up my repayments, they get it back with interest in 5 years from Barclays. And now we can do whatever we want. Right, Dave? We don't have to tiptoe up the stairs. I can paint the living room purple. Don't look at me like that, Money. It's my house. Barclays Family Springboard Mortgage. Make money work for you.
Your home may be repossessed if mortgage payments are missed. Deposit returned with interest after 5 years if no repayments missed. Subject to application, financial circumstances and borrowing history. T's and C's apply.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler, or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
Had the same job for the last 15 years? Working with the same people, in the same office, drinking tea from the same comedy mug, eating the same crayfish and rocket sandwich every lunchtime, using the same business jargon, and climbing the same greasy pole? What does that even mean? Then maybe it's time to switch it up, starting with the all-new Vauxhall Corsa. With its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
You're watching CNBC Squawk on the Street, live from the financial capital of the world. The opening bell in less than a minute. It's been a busy week, but we're not slowing down on this Friday. Obviously, commentary out of Druckenmiller and Tepper has helped futures along with housing starts. We will get to the downgrades, which really have not appeared to be a factor, at least for sentiment at the open, but they do involve some broad names, largely, at least in the case of the IBM downgrade, on the notion that IT budgets remain stretched.
Yes, that was the one kind of macro takeaway from some of the downgrades today, and we'll see how that filters through, if at all. If it's just an excuse, to downgrade IBM when it gets up here.
So let's get to the opening bell on the S&P 500 at the CNBC Real-Time Exchange. At the big board, it's Phoenix Tree Holdings, or Donka, an apartment rental service provider in China celebrating an IPO. We'll talk to the executive chairman of Stock Alley. At the NASDAQ, Lisha, an interactive audio entertainment platform in China. So on this IBM downgrade, it's Morgan Stanley. They go to equal weight. Their point is IT budgets are under pressure, especially in hardware, because they argue companies are still digesting the excess capacity they brought in after tax cuts, after a repatriation, after a asset depreciation. And that's essentially a share loss story, they argue, in IBM's case.
Yes, and a particular type of hardware, too. So it does seem as if this is exactly where IBM would be impacted. You see the stock opening up down about 1% right now. Obviously not been one of the leadership. This isn't characteristic of a lot of the upgrades and downgrades that are going on now, where I think it's a lot of people just trying to reckon with valuation levels where we've gotten to and either decide to double down or take money off the table. This is interesting, though, because software has been the comeback story within tech as well as semis this year. The rest of it seems to get left out. So, and semis, of course, is a 5G replenishment type story.
Of course, IBM, just one of the big names we're going to get next week, along with the Netflixes of the world, a bunch of airlines, our own parent Comcast, P&G. But for the time being, IBM's the big laggard on the Dow, along with UNH. The other one is airlines, and we're still wading through a bunch of airline news regarding Boeing. Story on our website from Leslie Joseph. Street's still trying to come to terms with what additional write-downs may be. This line out of B of A today: we are increasingly fielding concerns from investors regarding the likelihood that the MAX never returns to service.
I think that's always been the real kind of shadow over this whole story is it basically a lost generation for Boeing? Don't know that yet. I don't think you can kind of say that, but airlines' patience being tried, them figuring out their capacity situation at this point in the cycle, and all of it fits together. It's a little bit of pressure on that area, and it's again all the more reason where investment dollars seem to feel like it's just less difficult to buy the obvious stuff. And I don't think that can go forever, but the obvious stuff being the NASDAQ 100, which is dominated by 4 or 5 names.
It is stunning, though, to look at those 4 or 5 names, or at least a few of them. We have 3 companies now that are above $1 trillion in market cap. Apple, obviously the leader, Alphabet, and Microsoft. Apple's market cap is now $1 trillion plus more than an ExxonMobil.
Yeah.
Above. In fact, I can remember a time when ExxonMobil was the most highly valued company, or certainly amongst the top 2.
Oh, 8, yeah.
Yeah.
Definitely.
Or 3. Yeah. I mean, the numbers are extraordinary. This move up in Alphabet approaching 10%, Mike, just this year. It lagged a bit last year.
The dollar values are alarming. And I mean, obviously you get a little bit of a sticker shock. I do think it makes sense to anchor it somewhere. So these companies, the top 3 companies, let's call them, right? The top 3 $1 trillion companies, about $3.7 trillion in aggregate market value. Yeah. This year they'll have 140 to 150 billion in net income. It's 25 times earnings for this block of $3 trillion stuff. Okay. Is that insane? Does it make sense? They're the most profitable companies in the history of the world.
What's the blended growth rate, too? I don't even know.
It's double digits.
Yeah.
I mean, Alphabet insanely still grows close to 20% at its size. Now, if you go back, so Microsoft is twice the market cap it was at the peak in 99. So it was $600 billion back then. It's about $1.2 trillion right now.
It's making a lot more. It's making way more than
4 times more.
Right.
So it's twice the size, making 4 times the money. So when do we tip into crazy from just aggressive and complacent? I don't know what that point is. So that to me sets the scene for.
Will you send me a memo when you do know?
Yeah, I'm gonna put it on the calendar.
Just keep it quiet. Yeah,
of course. But yeah, so when to get off the horse in David Tepper terms.
Right. Yeah. Exactly.
And by the way, Tepper, as a credit guy, used to be mostly a credit guy. If you're staring at high yield bonds in aggregate yielding 5%, I don't know if I have something to worry about until that gets disturbed.
Listen, so much of it comes back to rates and just where we are and where you can actually get a return. I mean, it's fairly simple.
Druckenmiller has been notably bearish in past years. 2015, he issued a big warning about the future. He does seem to pin a lot of his hopes on the idea that Trump gets reelected.
Right. And, and Druckenmiller, though, to his credit, too, even when he was kind of bearish and not sure about policy, he said, own disruptive tech. And that goes back years, where he was kind of barbelling things. But I do think he's correct that this leg of the rally has coincided with the betting markets raising the probabilities of President Trump getting reelected. You can't kind of, say that's the main factor, but it's part of the atmosphere that is driving this market without doubt.
We don't want to toot our own horns too much, David, but Comcast all-time high. It's been a while since we've been able to say that.
It is, And again, back to market values, $215+ billion. Not that far away from Verizon any longer, at least within sight, which is always an interesting comparison. But a positive reaction to the unveiling of the company's Peacock streaming services. As we tried to say, and of course, as they spent a lot of time, the executives of the company saying yesterday, trying to differentiate itself from so many of the services that are already out there by having really what they expect will be the most popular part of the service being free. 7,500 hours of programming there, but free. 5 minutes of ad load an hour, by the way, which is low, certainly given our viewers know what typical advertising is in a given hour of television programming. And so that's their expectation and hope. They believe that there is a great deal of demand for digital advertising dollars. Linda Yaccarino, who runs ad sales for the company, made a presentation during yesterday as well. And I've heard numbers as high as they think they could sell 5 billion of digital ads versus the billion that we sell right now.
Yeah, that's an interesting part. The idea that what you're doing is creating digital ad inventory that didn't exist before in a quasi-linear TV way. And so that's kind of an interesting element of it. And actually, it mirrors what happened parts of the dot-com boom when newspapers were going online. They said, well, we can't keep up with the inventory. It didn't work for newspapers, but it worked for the overall digital ad economy.
Right. Now, and the question is how much of that will actually just come from things like YouTube, where shows are watched, where parts of shows are watched, and where, frankly, the monetization for the creator of that content, NBC Universal, is not really being paid.
Also, I mean, you can't discount the legacy, notoriety, and built-in awareness of a name like HBO or Comcast, because reports today that Facebook is retrenching on some of their scripted shows. It's just very difficult to get these shows get consumers familiar with them, even despite the cost.
Right. Yeah, well, even the whole flap over, Netflix is losing The Office and Friends. There may never be shows like that again, where you have that kind of that many episodes, that much popular recognition, and here we have Law and Order trying to get in that league.
Yeah, every one of these has their tentpole, so to speak. Law and Order, certainly that franchise for Disney, The Simpsons, the ability to watch, what is it, 30 plus seasons of The Simpsons, and things of that nature.
Yeah. Really quick on the Fed, we got a couple nominations out of the White House yesterday, Judy Shelton among them. Got this 20-year bond out of Treasury to help finance what we know are ongoing deficits. This debate now, Kashkari's tweeting about how it's not QE, the conspiracists who think that this market is pivoting upon QE. That's going to mean, and repo. Right?
Yeah.
When the Fed decides to step back, if they ever do, what's the market going to do then?
I mean, if the market's at a point where it's looking for a reason to say, okay, we've done enough, then it matters. I do think you have to keep going back to the idea that this market was up 25% off the low in October when the repo stuff started. It's up 11% since, and we also got the trade stuff in there as well. So a lot of people want to connect a lot of the dots, and I don't think, if people think it matters, but I don't think that there's a way to draw a true liquidity pipeline from one into equities.
But your point, though, is people believe it is, so
then
essentially
it doesn't hurt.
Right.
But by the way, people believe the trade deal, that all it did is remove a friction point that was imposed on the market. It didn't get you forward, really, in any material way in the horizon that the markets typically care about.
A couple of the stocks we should mention this morning. The Gap, we haven't mentioned the decision to no longer split the company. Interesting in that. A lot of shareholders were scratching their head for some time. Shares of GPS of the Gap, I think, are up a bit. Well, nope, actually not doing much right now. Did that news come out yesterday before the close?
No, I think it was after the close.
It was? Okay. Yeah. It was, okay. I wasn't sure.
So it was sort of unwound.
Wanted to make sure if there had been a reaction. And finally, I did want to mention Dave & Buster's. It's small. Obviously, people know it in part because they've been there, but KKR files with a 6.3% of position. And the total purchase price there of that position, given the market cap, is about $77 million. But what's interesting, along with the 16% increase in the stock price, is that KKR does, in the language of their 13D, say that they certainly will consider taking actions concerning any extraordinary corporate transactions, including but not limited to a merger, reorganization, liquidation, sale or transfer of material amount of assets, change in the board of directors and management. It reads like an activist 13D. I called KKR because they don't engage in activism. They were famous for never engaging in what they would call a hostile.
Right.
I'll take it for what it is. Stock's up a lot.
Interesting.
Yeah.
After it's been some challenging days for Dave & Buster's past couple of quarters. Let's get to Seema and see what's moving on the floor. Dow's up 18. Hi, Seema.
Yeah, up 18 for the Dow, led by technology. In fact, global markets ending the week on a high note, Carl. Japan and South Korea both closing at a 15-month high. Europe right now is at a record high. Looking at the stock 600, they're up about 1%. All of this following China's GDP holding on to a 6% level. Yet another sign of stabilization in the world's second largest economy. We're also watching the home builders at this hour. After a blow-away housing starts number, the home builders have been outperforming the S&P over the past year. Earnings now will take in focus for Lennar, Pulte Group, among some of these other home builders. Turning to CSX and earnings, the railroad's operator revenue decreased 8% year over year in the fourth quarter, driven by a double-digit decline in coal exports. The coal industry has been under pressure in the face of lower-cost natural gas and concerns over emissions, and that's pushed a lot of utilities to retire coal plants in the U.S. and seek cheaper renewable power alternatives. And even with trade tensions easing, CSX on the call is saying that it took industrial activity a while to cool off and will take a while to heat back up. That stock down right now. Finally, we've got an IPO here on the floor today. Phoenix Tree Holdings, one of China's largest co-living platforms, which renovates and subleases apartments, pricing a downsized IPO at $13.50 a share. That was well below the expected range of $14.50 to $16.50, and offering 9.6 million shares, down from its original 10.6 million. Remember, Chinese issuers have had a tough year, so we'll see how things shape up in 2020 now with a trade truce, at least for the moment. Guys, Dow currently up 17. Back to you.
Seema, thank you. Seema Modi on the floor. Let's head over to the bond pits now. Check in with Rick Santelli at the CME Group in Chicago. Rick.
Morning, David. You know, there's a lot of issues that seem to bug investors lately. Of course, the level of stocks is not one of them, but the level of rates is. Why haven't rates followed stocks more closely? Many times rates correlate with stocks. Rates go up when things are good and stock market goes up. This time, not so much, but it's really sparking to the data today. Look at a two-day chart of two-year note yields. The reason I put it 2 day is we had spectacular data today, especially on housing, 13-year best in terms of housing starts, and it popped up right up to yesterday's highs, basically, right up to unchanged, 157. It's now 156. It's down 1 on the week. It's down 1 on the day because it closed at both at 157. Now, as you move to the longer end, which is really more economically driven, short end's more hampered by where the Fed is with regard to policy, you see the 10-year not only challenged yesterday, it popped straight through. It's now at 183, up 2 on the day, up 1 on the week, and it is getting a nice bounce off of it. You see on the next chart, the early December lows, 6-week lows that we had on a closing basis the day before yesterday. Finally, the dollar index, like treasuries, yesterday's close and the weekly close last Friday are about the same. So dollar index is up a smidge on the day and a smidge on the week. Mike, back to you.
Rick, thank you very much. And when we return, Comcast shares hitting a new record high. We'll get Wall Street's perspective on our parents' launch of Peacock and what it means for the streaming landscape. Let's walk on the street. We'll be right back.
The Bond Report.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. 1 free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
Do you go on the same holiday every year? To the same country, in the same hotel, with the same sea view? Visit the same ancient monuments, lay by the same dolphin-shaped pool, meet the same Barrys and Sandras, and wear the same Hawaiian shirt that you'd never wear at home? Then maybe it's time to switch it up, starting with the all-new Vauxhall Corsa, with its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes in over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
Shares of Comcast, as we mentioned shortly ago, hitting what are all-time highs this morning. The company, of course, revealing new details about the forthcoming streaming platform we, as in Comcast and NBC Universal, are calling Peacock. Yesterday, the service will launch. It will launch for, by the way, Comcast subscribers on April 15th. Nationwide, though, not until the middle of July. There will be a free ad-supported option as well as 2 premium pricing tiers. Here's NBC Universal CEO Jeff Shell yesterday about the company's streaming content investment.
I'm pretty confident when you combine all of this content with our proven ability to market and launch new products with Symphony, and then what I think is a really smart strategy of taking light advertising and bundling to create this unbelievable experience free for consumers. This is going to be a very successful product and is going to be one of the key elements of growth for NBC Universal going forward.
All right, let's get some reaction from the street, many of whom were in attendance yesterday. Rosenblatt Securities' Bernie McTernan is here with us, and Cowen's Greg Williams also joins us. Bernie, let me start with you. What do you think in terms of them trying to carve out at least this idea that they're not competing necessarily with all the current streamers, but in a different area given the ad support and free nature of the service?
And that's certainly the case. We walked away more supportive of the service than we did walking in, because first, they're partnering with other cable companies. So Peacock Premium, 24 million subscribers in the U.S. will have access to the service for free. Could have another 16 million with Charter coming on board. And then we also think there's a high floor for the service, too. There's only $2.5 billion of OPEX commitment for 2024. That compares to Disney Plus at $4.5 billion. And Netflix, $17 billion next year, maybe going to, who knows how high. But then a lower ceiling as well, because right now it doesn't seem like it's going to be global in nature. So only 30 to 35 million subscribers by 2024.
Yeah. Gregory, give me your perspective, particularly from the financial side. Bernie mentioned, obviously, some of the metrics there. 30 to 35 million subs is what they're hoping for within, let's call it, 4 to 5 years when they get to break even. Is that something that makes sense to you? Are you concerned at all about the spend?
Sure. I think that the break-even is very doable. 30 to 35 million subscribers is very doable, especially if it's free. It's going to be an advertising-driven model for a lot of the segment. It's going to be about monetizing that advertising a little bit higher than, say, Hulu does, because they said $6 to $7 ARPUs, but it's only be 5 minutes of advertising. So they're going to need to do really good targeted advertising in order to get a higher CPM. As far as the financials and overall picture, they said a lot of that in December already. $2 billion investment over the next 2 years, break-even in 2024. So not a lot of things that would move the stock necessarily in the next few days because a lot of that information is already well known.
Bernie, a big question with a lot of these new entries in streaming is how much of it is a zero-sum game, how much of the new business is really just going to be trying to cover for what's being lost on the traditional side. For Comcast, how does that shake through the model?
Well, that's certainly the big question, is how much more cord cutting will this inspire? So with media companies, you can extend your reach, and that's why you want to go direct to consumer, but how much are you going to cannibalize the existing part of the business? For the cable side of the house, they only make a 30% margin on video, so it's really, broadband share gains is still a great story for the company going forward.
Greg, on that point, I mean, we're looking at new highs in Comcast. I believe you have a hold on the stock. Peacock is an important initiative. It's going to be taking some money, but what is your overall take right now in terms of where the company is, in terms of the value that the market is ascribing to it?
Yeah, absolutely. Last year, the company performed pretty much in line with the S&P 500. We expect a similar performance in 2020. This first half of the year, Peacock is really not going to be that catalyst. As of yesterday, we know that what we're going to get with Peacock. So now they're focusing on the other investors. Investors are worried a little bit about Sky. Investors, when looking at the mobile venture they're going into, and of course the healthy broadband market in the U.S. and Comcast's ability to take advantage of that, which we're bullish on. But these are the focuses now, and Peacock is now sort of, I don't want to say an afterthought, but now we can move that aside and focus on Sky and mobile.
Bernie, what are you going to be looking for in terms of penetration of the service once it gets going? Are metrics going to become important here?
Yeah, and so a key question coming out of this is, are we already at peak number of subscribers getting Peacock Premium for free? Because we know video subscribers are going to keep going down and broadband-only subs are going up. But what will that attach rate be of Flex boxes? Because right now you only get the service for free if you're a Comcast video customer or Cox video customer, and you have the Flex service with broadband only. So how, with services like Roku out there, how will they make sure that Flex is an important part of that broadband-only household?
And taken all together, does it do anything to mute Netflix's domestic subscribership, or where does it play for Netflix?
Yeah, that's a great question. I think the biggest impact will be on pricing power. With Disney Plus coming in at a lower price than expected, same with Apple TV Plus, Peacock for free to 24, maybe going to 40 million customers over time. That next big price increase could be a long ways off for Netflix, at least domestic.
Are you in the school that Netflix does need to have some ad-supported, lower-price product?
I think it's going to be tough for them too because it would be admitting defeat.
It would be a U-turn, no doubt.
Exactly. We have a neutral rating on the stock, $265 price target. So we expect revenue growth to substantially decelerate from 29% growth last year to 23%, going to high teens. And because of that, we're putting a 4.5 times revenue multiple on 2021 revenue and get to a 265 target.
No doubt it is a different marketplace this year than it was even a year ago.
Exactly.
In terms of who's out there for Netflix.
One of the secret sauces for Netflix was their distribution. And now that distribution, IP streaming direct to consumer, that's now everyone can do it. It's content that matters the most.
Bernie, Greg, thanks to you both.
Thank you.
Thank you.
Be sure to check out our podcast. Listen to the Opening Bell Hour or Squawk on the Street wherever you get them. Dow up 32 and the S&P 33.22. We're less than 600 points from Dow 30K.
Whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, small jobs, big jobs, work from home and your PJs jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30 gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Sometimes in business, you have to take risks, but trading across borders and currencies shouldn't be one of them. With Western Union Business Solutions, we can help you manage the risk of doing business internationally. Our valuable experience, expert knowledge, and extensive global network makes us the ideal trusted partner for your business. And with our customer-focused support team, you'll receive a dedicated solution and personalized service. Visit westernunionbusiness.com. Western Union Business Solutions, a global financial network you can trust.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. One free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
Pascal gobbles up the rebound and slams it down. Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Let's take a look at the NASDAQ 100's best performers since the beginning of the year. Tesla at the top of the list with a 21% gain. Over 12 months, 46%. Over 6 months, 100% gain on Tesla. Squawk on the Streets back in a minute. Dow's up 28.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards at the goal line. It's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Down the middle of the 10, got to the 5, tumbles in, touchdown.
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Puts his head down, crashes and spins, and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on
Brewer. David Faber here at Post 9 of the New York Stock Exchange on this busy Friday as we weigh all kinds of things, a bunch of downgrades on stocks. Some great eco data continues. A commentary from the likes of David Tepper and Stanley Druckenmiller. Dow 29,348 now, almost halfway between 29 and 30K.
Our roadmap this morning starts with more market records for Wall Street, with the Dow, the S&P, and the NASDAQ continuing a strong start to 2020.
Plus, enter the Peacock, what Comcast's new streaming service means for the already crowded field.
And the Tesla trade, we're going to speak to an early investor and former board member of the company about whether that stock can continue this amazing run.
Housing starts were a barn burner this morning. Industrial production, not so much, but we're about to get some consumer sentiment numbers. Rick?
Absolutely. Consumer sentiment on our January preliminary comes in at 99.1. Now, that is a bit light on expectations, only by a tenth or two. And sequentially, it follows what we were expecting, which was 99.9 or 99.3. But it is a preliminary read. Now, 99.1 isn't too bad. The month before, our 99.3 was 96.8. But let's get into some other issues I find interesting. 1 year inflation at 2.5, that's expected inflation. Last month it was 2.3, and the 2.3 was interesting because that was the second lowest read going all the way back to March of 2009. The 5 to 10 year inflation outlook moved up as well from 2.2 to 2.5, so they really have firmed up. And finally, our November read on JOLTS is a big disappointment. We lost the 7 million job openings handle, 6.8 million, well below expectations. It really breaks a string of very super solid above 7 million numbers. So job openings and labor turnover is a bit of a disappointment, but there was a positive revision to last month from 7.267 million to 7.36. Carl, back to you.
All right, Rick, thank you very much. Markets continue the record run then, with the Dow, S&P, NASDAQ all hitting some fresh record highs. Earlier, CNBC got some exclusive comments from hedge fund billionaire David Tepper, betting on the bull market to continue. He says we have been long and continue that way. Stanley Druckenmiller echoed those statements, saying, I revealed a very bullish posture intermediate term since October, when Powell guaranteed he would not rescind the insurance cuts. Joining us to talk about all of that, Invesco Global Market Strategist Brian Levitt's here, and BNP Paribas Head of U.S. Equity Strategy, Greg Bowdle. Guys, happy Friday. Good to see you. Brian, data's been, a little mixed when you throw in some of the transports, but sentiment is not. So which wins out?
I think sentiment wins out. And so really all investors, what we're looking for this year is some stabilization in economic activity off of a very weak period we had last summer, and policy that continues to be supportive. And that's what the markets are applauding. In this environment of relatively modest growth, but stabilizing, easy policy accommodations and no real inflation, that is a good backdrop for risk assets. It was last year and it continues into this year.
When we're looking at all the horse riding that was being done this morning, when we were on Squawk Box, there was a lot of I like riding this horse. I'm going to keep on the horse. I'm not going to get off the horse for a while until it's slowing down. The workhorse is the American consumer. Are you at all disappointed here by what's coming in? And Greg, maybe you'd want to weigh in on this. What's coming in on the job openings and labor turnover report, or for that matter, that you've got some consumer sentiment that looks just slightly disappointing?
Yeah, I don't think the data's been weak enough yet to derail this bull market, but I do think it's worth looking back to the first quarter of 2018, where we saw a very similar situation in the market, that the market had an extremely strong January, and then we had a very volatile, sharp sell-off in February. So I agree that the data thus far this year has probably been supportive for the markets, but valuations are very elevated after a very strong performance last year.
What I think is important to note, though, is that, over the last few years, we've dealt with some policy uncertainty and we've dealt with some policy tightening that has been disruptive to markets. My view is that we're in an environment of better policy certainty. So Federal Reserve, clearly, we're not necessarily all the way there on trade, but the market doesn't care about good or bad. It cares about better or worse. So incremental improvements there. So I don't know if we need to line this up with prior years. Prior years, we dealt with policy shocks, and I think this is going to be a year of relatively modest growth, but improving policy that should continue to be supported.
So is a policy shock now a balance sheet in contraction? Is that what we're calling a policy shock?
Well, a policy shock, it was really, let's call it more of a mistake. So the Federal Reserve tightening conditions inverted the yield curve, right? And brought inflation expectations down meaningfully. So it's not me saying it's a mistake, it's the bond market saying it's a policy mistake. And so the Federal Reserve had to back that off. Every time we've had corrections in markets in this cycle, whether it was 2015 or 2018, it was because of tighter policy and a flattening yield curve. And so the message in that is, in a world of 2% GDP growth, just don't do any harm. And so long as we don't do any harm, these markets tend to go higher. And you're right, Contessa, the trend is our friend.
Yeah, Greg, it's interesting because you actually think that we're moving from a late cycle trend back to a mid-cycle trend. Does this give some momentum to all of those who would be persistently Pollyanna-ish?
Yeah, I certainly agree that this idea that the Fed potentially being on hold if the data does come in a little bit better than we'd expected, a low but stable growth environment is one that can be constructive for risk assets. But I think with valuations so elevated, it does leave the markets vulnerable to shocks. It's not clear what those shocks are going to be, but clearly we're in an election
Markets
year.
Live team and Bloomberg customers can get more from Cree and the rest of the folks at MLive. Just type MLIV GO.
These are catalysts that could be potentially significant.
Is that why we're seeing defensive doing so well?
Yeah, I think that defensive's rallying has been a kind of interesting leg of this last bull market, and I think it's one that's not going to be sustainable in a risk-on environment. I think if equities continue to make new highs, I don't think that the kind of more bond-sensitive sectors, such as the staples, the utilities, can continue to outperform.
Where are the opportunities right now, Brian?
Well, I think in an environment where growth is going to be modest and policy is going to be supportive, you should expect rates to remain low. You should expect growth cyclicals to outperform the more value-oriented cyclicals. And if policy continues to be supportive in the United States, then that leads to a more stable currency and some opportunity in non-dollar assets, which is why you're starting to see some activity around emerging markets and Asian equities. And so I think the opportunities continue to be in U.S. growth and in the emerging economies.
U.S. over other parts of the world? Because we've heard from a couple, JPM today sees U.S. slowing to 1.7, even as the globe holds 2.5. Right? And they're saying the era of U.S. exceptionalism has come to an end.
So let's make sure we know what we're talking about. Are we talking about economic activity, or are we talking about outperformance? So in this type of a world where the global economy is relatively slow, you're going to look for companies that can generate true top-line revenue growth irrespective of where they're headquartered, and that has primarily been the United States because we've been a strong dollar environment. In a more stable environment, you can start to look to those companies outside the United States that are generating true revenue growth. Some of them are in China, some of them are in Europe. So I don't think the U.S. U.S. growth companies lose their leadership. I just think that leadership broadens to include some of the non-dollar asset companies.
Greg, in terms of, we've been through this revaluation process last couple of months as we really cleared the deck on trade. So is 20 now the ceiling? Where is that window? Where are we right now?
Well, I don't think you really see a ceiling in terms of valuations. That's one of the things that makes timing the market so difficult. So I think if we stay in an environment where the data continues to beat, there's no reason why multiples can't continue to expand. But I do think whenever we do hit some potential piece of turbulence, whether it's political, whether it's a deterioration in the data, the higher those valuations go, the more volatile the market could be and the sharper a correction we could see.
B of A this morning, Brian. We stay irrationally bullish until peak positioning and peak liquidity inside a spike in bond yields and a 4 to 8% equity correction. You see anything wrong with that game plan?
No, and you know, this idea that these cycles will end with euphoria, right? I don't think we're there on euphoria. So talk about peak positioning. We've actually for 10 years have been in an outflows environment from equities over 10 years in aggregate. A lot of money going into bonds. And, you know, if you look at the Gallup poll, something like 57% of American households own equities in any form, down from 2/3 in 2007. And so that's why you hear a very unloved environment. And from what I hear, more Americans played the lottery last year than invested in equities. And your odds in the lottery are 1 in 200 million. Your odds that the market hits a new high since 1957 is once every 16 days. So I believe we're in a secular bull market. And I think secular bull markets last historically around 14 to 18 years. What we were quibbling about last summer was the cyclical. Are we heading into a recession? Recessions can happen in a long-term secular market. I don't believe we're heading into a recession. So then we get down to, is this economy decelerating and we want to get defensive, or is this economy stabilizing and we want to own the growth-oriented cyclicals and think about non-dollar assets? I'm with the latter. I believe we're stabilizing. Policy supportive, should be good for equities.
All right, a lot to talk about, obviously, regarding supportive policy and the future, guys. Brian, Greg, have a great weekend. We'll see you soon.
Thanks, Carl.
Thank you.
U.S. home building in a surprise surge to a 13-year high in December, suggesting the housing market recovery is back on track amid low mortgage rates. Let's get to Diana Olick. You know, Diana, I said it's a surprise, but it was a stunner.
Yeah, it was huge numbers for home construction to end 2019. December housing starts jumped nearly 17% for the month and were about 41% higher annually, the highest level since December 2006. Break it down by type. Single family up 11% for the month to the highest level since June 2007. Multifamily also surged 32% for the month, which is surprising given that we're already expecting to see big deliveries of finished apartments this year. That just means builders were bullish on rental demand in the second half of last year. Now, going regionally, starts were strongest in the Midwest and South. Single family was weaker in the West and Northeast. Now, I don't see weather playing a huge factor in any of these since they are seasonally adjusted. Builder confidence is right around the highest in 20 years, likely due to low mortgage rates, which came down last summer, as well as strong buyer demand and tight supply of existing homes for sale. Now, building permits, which are an indicator of future construction, they were down for the month, both single and multifamily. Single family was almost 11% higher compared with December of last year, though, but multifamily was 3% lower annually. In general, though, Single-family builders are finally getting into that entry-level product, seeing very strong demand for more affordable homes. We saw a big jump in mortgage applications to buy a home last week and a huge jump in those applications to buy a newly built home. Builders ended the year with without a lot of backlog, and so we are likely to see strong starts in the coming months given all this demand. Back to you guys.
You know, Diana, we spent a lot of time talking last year about the fact that there was such a demand for these entry-level homes, and yet the builders couldn't make it work financially because the materials cost too much and the labor cost too much. Is that moderating somewhat?
Labor costs are not moderating. That's a big problem still. But material costs are coming down a little bit. But mostly you're seeing the builders go a little bit further out. You were seeing a lot of demand in the big cities and in the close-in suburbs. Builders are now going a little farther out again, trying to get that cheaper land, but also building more bulk and also very entry level, that is no particular specialties in the home. You're taking away the granite. You're taking away some of those special perks that we were seeing in homes back in 2016 and 17. Just basic level entry homes. And they're able to sell those now, and they're actually really starting to ramp up production on those.
All right, Diana, thank you very much.
Well, still to come right here, Phoenix Tree Holdings. You may have seen it making its debut here at the New York Stock Exchange. We're going to speak, there it is, with the executive chair later. That'll be on Squawk Alley. Plus, a new streaming service flying into the ring. Do peacocks fly? I guess they do. They kind of do a little. Like
level.
They do like little jumps, little fly jumps. This is going to soar, though. The addition of NBC's Peacock. What does it mean to the already competitive streaming landscape? We'll discuss that. By the way, here's a reminder. You can always watch us live on the go on the CNBC app. Download it now. Let's walk in the streets right now.
At Fidelity, online U.S. stocks and ETFs are...
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want movies, I've got blockbusters. Football, how about the Premier League? Or crime dramas, I've got loads. And they're never going to guess who did it. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
On the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
Hear the action live on TuneIn Premium.
Gonna move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Down the middle of the 10, got to the 5, tumbles in, touchdown!
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
He's taking contact, and he takes it in! Touchdown! Puts his head down, crashes and spins, and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
CNBC's parent NBC Universal unveiling its ad-supported streaming service with access launching for Comcast subscribers on April 15th. Nationwide launch will be in the middle of July. Julia Borson has a look and how it fits into the streaming landscape as well. Julia.
Well, David, Comcast shares up about 1% right now, hitting an all-time high this morning on the unveiling of Peacock, which is looking to be a new version of broadcast TV for the internet age, rather than competing with Netflix. Now, Peacock Free will have 7,500 hours of content, new and old shows, series and films, and some live news and sports. It will have fewer ads than TV, less than 5 minutes an hour. The premium tier, with twice as much content, will be available to anyone for $5 a month with ads. Comcast and Cox customers will get Peacock Premium for free. An extra $5 a month makes the service ad-free.
We think there's a clear opportunity to create a streaming platform that we own and operate, that give people what they want when they want it, but allow us to monetize. We also think we're uniquely positioned to take advantage of this opportunity and play a leadership role in the on-demand streaming world.
NBC Universal forecasts between 30 million and 35 million active Peacock accounts by 2024. They have not announced their international rollout plan yet. Now, that is less than HBO Max's forecast of 50 million global subscribers and Disney Plus's of at least 60 million global subs by that same year. Now, to put those numbers in context, Netflix has over 160 million global subscribers. But Wedbush analyst Dan Ives says, quote, "We believe given the massive content library, sports properties, and distribution footprint that these sub numbers for Peacock are conservative." And Rosenblatt calls Peacock's, quote, "advertising innovation a win-win for consumers and advertisers." Now, while analysts are largely bullish, Guggenheim points out that the product could have a negative impact on Comcast's linear video business. That's the TV subscriptions. Guys, back over to you.
Yeah, which keeps declining, of course, and the question is just what's the rate going to be each year, Julia? You know, it is interesting, the inclusion of news and sports here. I was trying to get a little more information on it. It's not as though you're going to be able to get MSNBC fully streaming or CNBC fully streaming. They're going to curate, but they are trying to at least help people who have an interest in things beyond entertainment at least get a bit of a taste of it as well.
Absolutely, David. And I think it's really interesting that they will curate it. It's not like you're going to have a live feed of CNBC, but they will have some live content. And I think that's one of the factors that really makes this totally different than what you would get from a Netflix or even from a Hulu, because the idea that they could have some live news coverage, especially in the lead up to the presidential election when people are so interested in news, when you look at the fact that they'll have some live coverage as well of the Olympics, that's going to be a real factor that can get people to engage with this.
Yeah. Julia, thank you. Julia Borston. Joining us now, Wells Fargo analyst Jennifer Fritchie. She's covers, of course, Comcast. What's your overall take, Jennifer, in terms of what you thought about the presentation and the impact it's going to have in terms of overall in streaming and specific to NBC Universal?
I thought, thanks for having me, David. I thought they showed up and showed why they will be a relevant player here. I think that they did a very good job of articulating how this ad-supported premium content is, as they called it, kind of a white space for the streaming world, and they certainly have the content catalog to compete effectively.
And what do you make of the targets? I mean, in terms of both subscribers, it does appear it's going to be a domestic service for at least the time being. Are they being realistic in terms of who they can reach? And are they being realistic in terms of the ARPU they're seeking, given there's only going to be 5 minutes of ad load per hour?
Yes, I think both, and I heard the prior speakers say this. I think the kind of the buzz coming out of that conference from both buy and sell siders was that the guidance they offered was extremely conservative, especially the revenue number. I mean, to put it in perspective, the 2024 outlook they gave for revenue from Peacock is 2% of their total revenue. 30 to 35 million customers, given how many eyeballs and customer relationships and touch points they have, I think is extremely doable.
Given their focus on advertising here, do you think that this is an attractive platform for advertisers?
Yes, I do. And I thought that, versus some other streaming kind of coming out parties we've seen here, I thought Comcast did a very effective job of kind of connecting the dots and the math around the advertising opportunity. I think with a targeted ad of 5 minutes per hour, you're going to have a captive audience. And I think that, and they alluded to this, that will offer a premium pricing from these advertisers. And certainly they announced a very blue-chip name of initial sponsors. And my sense is that there were more incoming calls to get those sponsorships than outgoing ones made by Comcast.
Hey, Jennifer, you point out Linda Yaccarino, our parent company's chair of ad sales, pointing to a study that said 80% of people will choose a TV service with advertising for a lower price. So I guess the question is, why isn't that done more often?
Good question. I think that's the opportunity that Comcast sees as, again, this white space area to target. Now, of course, Hulu does have advertising and that people are paying for that. But I think the targeted, the time amount of advertising really can't be emphasized enough because it's a small 5 minutes and an hour. It's not, I think in that case, advertisers don't see that the consumer will think of advertising as an irritant, for lack of a better word. And I think that's the opportunity they have seen.
Yeah, I would add to that, by the way, and speaking of Brian Roberts and Steve Burke yesterday prior to the presentation, they were amazed that nobody else had moved into that space, so to speak, that white space, at least they feel that they've identified, Jennifer, over these last 18 months to 2 years that they've been trying to figure out exactly what to do. And they were relieved that they sort of feel like it's still available to them right now in terms of what they can do there. Do you believe, though, overall, that it will help to erode the existing subscriber base amongst Comcast or NBC cable network customers?
I mean, that is the needle they have to thread. But I think what Comcast has effectively done, and X1 is a clear example of it, is kind of have more touch points for that customer base that they have. And I think Peacock is going to be yet another example of that. So I think, for the people who have not cut the cord, and, that's still a fairly large number, they will also get this service for free. And you will, it could be almost an add-on to those services. But I think, I think they said this is where the world is going is streaming, and that train has left the station, and they have a role here, especially from the content that they already own. The challenge that they had before this is a lot of the content that they own was being monetized and profited by other streaming services. So this corrects that.
Right, on third-party platform. YouTube, of course, which they seem to be particularly focused on as opposed to the likes of a Netflix. Jennifer, thank you. Appreciate your time.
Thank you.
Jennifer Fritchie.
After the break here, it's the top-performing stock on the NASDAQ 100 this year, but can Tesla continue its drive higher? We'll speak to an early investor and former board member next when Squawk on the Street returns.
Ghostbusters. Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner! Slam dunk LeBron!
Harden steps left. He shoots for three, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Tesla leading the list of gainers in the NASDAQ 100 so far this year, but its ride to the top is not without controversy. Short interests built up in the stock as the Washington Post points out. Trouble may be brewing for the company in China. Joining us now is Tesla investor, former company board member, Steve Wesley. Steve, it's great to see you today. As it stands now, 20% of Tesla's shares are trading short. Do you think that this $500 share price is unsustainable?
Well, look, only time will tell. But I have a hunch Tesla's going to continue to do well. Here's why. First, they're growing at 20% a year, while most auto companies are shrinking. Second, the firm has 18.9% gross margins, higher than most other auto companies in the world. Third, moving international very quickly in Europe, already the number one selling car, gas or electric, in the Netherlands, Norway, Switzerland, number 3 in the UK. They've moved into China very quickly. They're expanding the product line. If Tesla's had cylinders, you'd have to say they're hitting on an awful lot of them. But there's a bigger picture here, and it was said by Herbert Diess, the head of Volkswagen, and he said, look, all the others are being valued as auto companies. Tesla's being valued as a technology company. They're on track to do $30 billion this year, 3x multiple. If it's a tech company, that's a bargain.
All right, so a part of the drive definitely is this performance in China and the opening of the Shanghai factory. And of course, we all saw Elon Musk's jubilation there. Is the dancing premature when you consider the fact that China has something in the neighborhood of 400 plus electric vehicle manufacturers coming online?
I don't think so. And here's why. First, China's the biggest auto market in the world. There's a huge demand there. Second, China has extremely acute pollution problems. I believe the demand for electric vehicles is going to be huge. Don't forget, the Tesla Model S, which is the primary vehicle they're selling there, has a miles per gallon equivalent of 123 miles per gallon. What's not to like about that? But on top of all of that, I've spent a lot of time in China, and we've done business there, is that the Chinese consumer has traditionally, historically, been very brand conscious. They love Apples. They love the high-end brand names. And Tesla, like it or not, is the dominant brand in the electric car business. I think they're going to sell very well there. I think it's going to be the must-have vehicle in the country for those who can afford it.
Yeah, well, to the point you'd made earlier, Steve, about being a technology company, what are your expectations when it comes to autonomous driving? The idea of robot taxi fleets available and Tesla being the leader. It's funny, I hear different things about their data capture because they do have so much data available given the cars that are on the road. But it's unclear to me how much of it they're actually keeping to help AI and to help improve and continue to sort of fuel what would be autonomous.
Look, you've put your finger on the key issue of the age. One, part of the reason so many auto companies may be in trouble is we're moving toward a world where more people are doing ride-hailing. My kids, who are 18 and 20, don't need to buy a car. They're happy to do ride-hailing. And the question is, how quickly does it become autonomous? Mr. Musk has done something some people say is rash, others say is brilliant. We'll see. But he's moved quickly to put cars with increased autonomous driving features on the road. I believe they have captured that data.
It's ultimately, in the auto industry, going to be about who has the most data will be able to produce the safest autonomous vehicles. By the way, with the cost of LiDAR coming down, I think you'll see autonomous vehicles on the road in the next 4 to 5 years, far sooner than anybody thought. And if Tesla ends up leading that race, $500 could look like a bargain. 4 to 5 years, autonomous. Again, the value here, though, that the market is ascribing to the company just based on auto sales, you're a believer that it's going to be about a lot of other revenue sources, I would assume. Autonomous being one of them, perhaps battery technology being another, that justifies this current market value of roughly, let's call it $90 billion.
Look, it's all the things I said. They're, simply put, growing faster than virtually any other auto company in the world. They're going into more markets more quickly. They're now coming out with a full line of vehicles. We all love to laugh at the Cybertruck because it looks a little crazy, but they've already taken 250,000 orders. Some of that, obviously, is the power of the brand. But I would step back a little bit, and this comes directly from what Mr. Deason, the head of VW, said, and I think it's a speech everybody should read. But we're in an extraordinary age where there are two issues that kind of linger above everything else, or rise above everything else. One, people have concerns about global warming. Two, everything we deal with from our homes to our cars are becoming digitized. Tesla's put a vehicle on the street, 123 miles per gallon equivalent range, the most digitized car in the world, the first car company to really realize people wanted more from a car. It may end up being the most powerful digital mobile device in our life. We all think that's the phone today, and it certainly is. In the future, will it become the car? If so, Tesla may have the pole position.
Also, if we can put a plow on that Cybertruck, it might be very useful in our driveways as well. Steve, thank you so much for joining us. I appreciate your perspective.
Happy to be here.
Let's get a news update now. Sue Herrera has that for us back at HQ. Sue.
Good morning, David. Good morning, everyone. Here's what's happening at this hour. Ayatollah Ali Khamenei, Iran's supreme leader, delivering a Friday sermon in Tehran for the first time since 2012. This comes as that country grapples with the fallout from the public anger at its accidental shoot-down of a Ukrainian plane. Khamenei lashed out at Western countries, dismissing American leaders as clowns. 11 U.S. soldiers were injured in the Iran missile attack at a U.S. Air Force base in Iraq last week. They were treated for symptoms of concussion, but initially the U.S. said that there were no casualties. And Swedish activist Greta Thunberg joining hundreds of people in a climate march in Switzerland. She delivered a defiant message to global leaders.
To the world leaders and those in power, I would like to say that you haven't seen anything yet. You have not seen The Last of Us. We can assure you that.
You are up to date. That's the news update this hour. Contessa, I'll send it back downtown to you.
All right, Sue, thanks for that. When we come back, the Bernie Sanders economy, what the presidential hopeful's policies could mean for your wallet. Squawk on the Street returns in 2 minutes.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Peoples of London. Cooking for family and friends is a real hassle, Sergey tells me. So I, Alexander, occasionally take care of marvelous dinner for whole family. Which means we all go out for meerkat meals. Exactly. How did you guess? Get 2 for 1 on food for up to 6 people at your local favorites, like the Yacht, with meerkat meals. When you buy, so compare the market. Qualifying purchase, app only, 2 for 1 on selected food, participating restaurants, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
New year calling for a new kitchen? Get to B&Q for up to 5 years interest-free credit with no deposit on our new kitchen range. Hurry, offer ends 2nd of February. You can do it when you B&Q it. Minimum spend £8,500 for 5 years interest-free credit. Credit subject to status. B&Q PLC is a credit broker and works exclusively with the Targi Capital UK PLC, both authorised and regulated by the Financial Conduct Authority.
A new Reuters poll shows Bernie Sanders climbing in popularity. He's now tied with Joe Biden among registered voters. Robert Frank joins us now. He's got more on Senator Sanders' proposed plans and what they could mean for the economy. We spent a lot of time on Elizabeth Warren, perhaps not as much on Mr. Sanders, so certainly looking forward to hearing a bit about this, Robert.
Yeah, David, and the numbers are even bigger. Bernie Sanders' plan for health care, the Green New Deal, and jobs would more than double total federal spending. Now, Sanders has not released the total cost of his plans, but a new estimate by the former Treasury Secretary Larry Summers finds that the plans would cost over $60 trillion over the next decade. That is more than the current projected total government spending over the next 10 years of $52 trillion. Another way to look at it, it would be 2.5 times bigger than FDR's New Deal, and federal spending as a share of GDP would grow by 20%. That would be the largest since World War II. Now, you compare that to Senator Elizabeth Warren's plan, that would increase spending by 12% of GDP, Buttigieg by 2%, and Biden by 1%. Now, Sanders' big ticket item is, of course, that Medicare for All plan that would cost around $30 trillion over the next decade. His Green New Deal adds another $16 trillion. Add to that his Jobs for All plan. That would give every American who wants a federal job a job. That adds another $7.5 trillion. On top of that, you've got the plans to cancel all student debt, universal preschool, and universal child care, all of which expected to bring it up to that $60 trillion number. Now, Sanders has proposed about $20 trillion in new taxes that would be on the wealthy, Wall Street, and corporations. Unclear, though, how he would raise the remaining $40 trillion. No comment from the Sanders campaign on the total costs of those taxes and those plans. Guys?
Those are some big numbers, Robert.
Yeah, very big.
Very, very large. Okay, thank you, Robert Frank. With us now to weigh in on the Sanders plan, as well as other news this week, such as the U.S.-China trade deal. I got another question for you as well on this Comey stuff, Jim, that I want to hear from you as well on. It is Jim Stewart, of course, New York Times Pulitzer Prize-winning columnist, author of Deep State, Trump, the FBI, and the Rule of Law, which is what I was referring to. But first, you know, you love, I mean, we always refer, you spend a lot of time reporting on taxes and plans. What do you think when you hear something like that?
Well, I will say that the Sanders plans are bold. I mean, they are so far from the status quo. They really are, I hesitate to use the word radical, but they are very far out there. How he would pay for it, we can come to in a moment, because that absolutely goes right to the taxes. But apart from that, it's the philosophy of this, I think, is really a very profound difference between him and the other Democrats, and certainly Trump. Take the free trade. He is totally hostile to free trade. He's very different from Trump, though. He wants to use tariffs and other protectionist measures, but his goal is purely protectionist. It's to support American workers and American industries. It's not to use it as a weapon to increase free trade, which is what Trump has sometimes said he's trying to do, like with China. He's very pro-worker, but he has no interest in the American consumer. The cost of this, put aside the taxes, the cost of these protectionist plans in terms of higher prices is something I don't think people have focused on at all. And he certainly has no interest in shareholders. He really wants to soak corporations. And I've sort of wondered, okay, so he puts in all these protectionist policies, maybe American corporate profits go up, but then he wants to take all that money and hand it over either to the federal budget or redistribute it to the workers in these corporations. It does strike me as a very kind of 1930s view of the world where, you know, it was much more worker, owner, you know, labor, capitalist. It's like it doesn't seem to take into account like small businesses, entrepreneurs, startup. I mean, the economy is so much more diverse and dynamic, and the classic kind of laborer pool is really much smaller, but it seems to be getting traction.
Why do you think that kind of plan is so appealing that he would now be in the lead among potential Democratic voters?
Well, I think the rhetoric is resonating. I mean, he says, there's too much inequality, the rich are too rich. A lot of people agree with that. And I can't believe they really focused on the details of how you take that rhetoric and then translate it into policies that would significantly change that. And by the way, I think the jury is certainly out of whether this would help. I mean, other countries have gone down this path, mostly, in developed Europe, have really looked at the future and backed off from it. And they're backing away from the wealth tax. They've backed away from state ownership of, the means of production. He is doubling down on that. And I think many voters have just not gotten down into the details.
Sanders has been Sanders for years. But I wonder if you think we got Republicans in the White House running trillion-dollar deficits, if that has cleared some runway for him to be even farther out on polarity, at least, of policy.
Yeah, I think that's correct. I mean, Republicans have given up the balanced budget argument. Oddly enough, it's now the Democrats saying Trump is blowing up the deficit. But there is a sort of now prevailing sense that, deficits don't matter. And I haven't heard Sanders quite say that yet, but when he starts getting pressed about where do you come up with the extra $40 trillion, I expect we will hear something, it's clear that we have the borrowing power. We're investing in the future. I will say another spending thing that he's big on and hasn't gotten much attention, similar to Trump, although Trump hasn't done anything with it, is infrastructure. He's been calling for $1 trillion investments in infrastructure, which I actually think is a prudent use of government spending.
Yeah, 40. I mean, we have our national debt is about 23 trillion right now, somewhere in there, and we're adding to it very quickly.
We are, but this would be a scale that is so unprecedented. Again, yes. I just can't believe that voters have really focused on this very much, and I am kind of surprised that the Democratic rivals have not been hammering him more. And, people tend to lump him and Elizabeth Warren together in a lot of this stuff, but they are philosophically very different. I mean, compared to Sanders, Warren is a red-blooded capitalist.
That's what she says she is, but, yeah.
Well, she's got some pretty, redistributionist policies going there, too. They both jumped on the wealth tax. But again, as I say, philosophically, Sanders is way, way farther to the left than any candidate I've encountered in my lifetime.
Is Bloomberg making any headway with all of the millions he's spending on advertising?
Well, I think. I mean, I don't see any surge in the polls, but I think the Bloomberg strategy has always been keep the awareness out there, and when all the chips fall, people are going to realize I'm kind of the only possible candidate who could beat Trump, and then they're going to come around. So I think he is playing a long-term game. The spending is not aimed at polls today or tomorrow, but Super Tuesday down the road when we see more. And I think, yes, he is maintaining that awareness level with the money. It's expensive, but look, he's got the money.
Yeah, Jim, I did want to come back, as I'd mentioned, to sort of some news of the day. It's not involving this at all. It's the Justice Department potentially investigating leaks from Jim Comey, but there's a reference in the New York Times to your book, where you apparently did disclose some Russian document. What do you make of this seemingly out of nowhere investigation of Comey and this document that they're talking about that you wrote about in your book?
Yeah, well, I think I did write about that document, and I'm kind of surprised it didn't get more attention at the time. I'm hearing rumblings that it was, the references in the book that got the Justice Department interested. I don't know if that's true or not. But I think it's very worrisome that at this juncture, there seems to be this concerted effort to get Comey on something. And I don't want to comment on, where information came about for this particular document. It remains a very heavily classified document. The origins of it also still very classified. But there's a lot of people who know about this document, knew about this document, knew the role it played. I reported in the book that Andrew McCabe went and gave Loretta Lynch a defensive briefing on this document. So there were a lot of people in the previous Justice Department who knew the existence of this. And when you start going at a leak, I will just say, generally speaking, as a reporter, the top person in the agency is rarely, if ever, the source of this kind of information.
Are they trying to weaponize the Department of Justice?
Absolutely. I think that pattern is now very, very clear. How many times has Comey now been investigated? Over the memos, over the other supposed leaks, no prosecution. Now they've got another one going on him. They still got McCabe under investigation. Who knows who else they're looking into there? I do think it is a worrisome sign that how politicized the Justice Department has become and how vindictive they are to try to go at the FBI, who I still think, yes, they've made some mistakes here and there. They're human beings, but they did, heroic service to the country, and they still are doing it.
Jim, thanks. It's a story that we'll keep an eye on as well, of course, given your reporting on it. Jim Stewart.
As we go to break, take a look at shares of Gap today, erasing gains that it did generate since the close of trade yesterday as they cancel plans to spin off Old Navy as a separate company. Dow's up 63 points. We're back in a moment.
Whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs. Small jobs, big jobs, work from home in your PJs jobs. Or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
You don't just live in one room, so why should you Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's super-fast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre errors, Sky Kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. Atoll protected.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Market expert Jeremy Siegel has a warning for investors after this record rally. Find out what that is on tradingnation.cnbc.com. More Squawk on the Street coming up.
Puts his head down, crashes, and
the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown!
Search NFL to never miss a moment of the action.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Welcome back to Squawk on the Street. Rick Santelli here, live on the floor of the CME Group. If it's earnings season, it's Rebecca Corbin Advisors. All right, 2019, pretty good year. We're already up, over 4% in the NASDAQ, and it's only January. The respondents seem to have done pretty well in 2019. Highlight their top answers and highlight where they were a bit light.
Well, 82 institutional global investors, $1.2 trillion in equity assets, feeling very good about not fourth quarter 2019, that's baked in, feeling really good about 2020. According to survey respondents, 73% are expecting 2020 outlooks, guides from corporates, to come in line to be better than 2019 results.
if I look back, there was something big everybody was talking about, recession. Your respondents didn't put that at the top of the list. More at the top of the list was trade and just the U.S. in general. And considering inflows in the U.S., they were really correct. What about recession and all these issues moving into 2020?
Okay, so recession is pushed off the table. The majority of investors think that that's 24 months out. They've really gotten their arms around slowing growth, okay? Corporates have done an exceptional job managing expectations heading in, downshifting from the second quarter to the third quarter. Now they have a job to be conservative coming into the 2020. U.S. trade split. Investors were split on whether that was going to be resolved by U.S. presidential election. They got a boon right here. We're moving from 15% to 7.5%. They've been in cost-cutting mode. That's going to be helpful to margins. And talking about margins, investors are expecting resilience.
Well, they have to be. One of the biggest issues, not only for 19 and 20, but it's for beyond, is how long the bull market's going and how the economies of the U.S. and the globe don't necessarily measure properly with the overperformance in equities. Filter that for me.
Sure. There's nowhere else to place your money. So we've got money coming in to equities. We've got corporations managing expectations. We've got a tremendous amount of free cash flow, and they're expecting big free cash flow. That has to go somewhere. Has to get reinvested, has to go to buybacks, has to go to M&A. There's still a lot of opportunity in this market.
Ultimately, though, it's going to be a picker's market because obviously your respondents are looking at various industries, trying to handicap, where the opportunities are. And your final thoughts here is the election coming up and Trump and his administration in general figuring in to the respondents' answers?
Absolutely. 97% of investors do not think the hearings will lead to Trump's dismissal. And I will tell you that the only thing that probably could bring these markets down is Trump not getting reelected.
Wow. Who would have ever thought that a few years ago? Rebecca Corbin, thank you for joining me in the wonderful city of Chicago on this earnings season. David Faber, back to you.
Okay, thank you, Rick Santelli. Now time to send it over to John Ford, another man who does not wear a tie every day. I'm only Fridays, John.
Welcome to the club, David. Yes, well, it's a little like the WeWork, a residential apartment living in China. It is not profitable. It's fast growing, and it just IPO'd here at the New York Stock Exchange. We have the executive chairman coming up on Squawk Alley.
When we started our business,
hard Megxit or soft Megxit? Have Harry and Meghan misjudged public feeling? And what does their departure mean for the future of the monarchy? With questions mounting, turn to The Telegraph for answers. Subscribe today at telegraph.co.uk.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Fly with Cathay Pacific and arrive ready to make the most of the endless white beaches of Bali. Book now at cathaypacific.com. Cathay Pacific. Move beyond.
At Ring, we've reinvented the doorbell. So no matter where you are or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. One free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Ah, finally another commercial, said no one ever.
Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
Welcome back to Squawk on the Street. We want to call your attention right now to what's happening with technology in the S&P 500, one of the best performing sectors out there. Over the past year, look at that outperformance. The gap between the S&P 500 technology sector and the S&P overall is 24 percentage points. That's a huge move, but not every single tech stock out there has been doing its fair share in participating. Check out these three stocks that have seriously underperformed over the course of the past year. DXC is down 43% during that time span. Juniper Networks down 12% in that span, and F5 also down 11%. So as we talk, Carl, about the tech stocks leading the way higher, some of them have lagged. You wonder whether traders and investors at some point, Carl, will look towards some of those underperformers to see if they will catch up to the broader market. I'll send things back over to you.
All right, Dom, it's a key question. Thanks. We do want to mention a quick programming note here. Do not miss our Sarah Eisen making her return to CNBC live from Davos, Switzerland next Tuesday. She'll be reporting on the ground alongside some special guests, including the CEOs of UPS, Philip Morris, and Micron. We cannot wait to have Sarah back, not just for her booking prowess, David, but the clarity she brings to central banks in what is going to be another year where that's a big part of the focus.
Sarah who?
Eisen.
Oh!
Like Rich Eisen, but
I'm
different.
just kidding, because I know that would drive her crazy, so I wanted to do that. I'm looking forward to, of course, her being back. Very much.
All right, coming up on Squawk Alley, a public debut here at the NYSE. The executive chair of Phoenix Tree Holdings will join us after the break. Dow's up 41.
Our retirement plan with Voya?
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs. Small jobs, big jobs, work from home in your PJs jobs. Or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. One free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
You don't just live in one room, so why should your Wi-Fi? With Sky Broadband's Wi-Fi guarantee, you'll get Wi-Fi in every room or money back. Perfect for food shopping in the bedroom, gaming in your PJs in the lounge, or streaming sci-fi movies in the kitchen. Get Sky's superfast broadband and Wi-Fi guarantee. £32 a month for 18 months with $19.95 setup. Click on the banner now.
Sky Fibre errors. Sky kit required. Refund on boost component of subscription paid during current minimum term up to date of claim. Minimum 3 megabits per second or money back. Prices may change during minimum term. See sky.com/guarantee.
This is a live message from the Survivalist Network. There are reports of an impending zombie apocalypse reaching London. But don't panic. Our intel shows that for £199 a month with 0% APR representative, you can locally access the Toyota Hilux Invincible, the only vehicle with the build strength to withstand savage hordes of the undead. Once inside your Toyota Hilux, stay on this frequency for updates. You'll be fine.
0% APR representative on new sales of Hilux Invincible over 42 months. £199 per month. Customer deposit of £10,246 when financed through Access Toyota by 31st of March 2020. £12,525 optional final payment. Subject status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Good morning. It is 11 a.m. at Comcast headquarters in Philadelphia. It's 11 a.m. on Wall Street, and Squawk Alley is live. Good Friday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with Morgan Brennan. John Ford here at Post 9 of the New York Stock Exchange. More record highs today as the run continues. 111 S&P new highs today as we watch action in technology. Despite some downgrades and plenty of commentary from some big hedge fund managers. Tech's leading the way, coming off another record close with Alphabet becoming the fourth U.S. firm now to reach $1 trillion market value. The 5 most valuable tech companies now account for 17% of the S&P and are worth over $5 trillion combined. TD Ameritrade Chief Market Strategist J.J. Kinahan's with us, and Stifel's Head of Institutional Equity Strategy, Barry Bannister. Happy Friday, gents. Good to see you.
Hi, Carl. How are you?
See you. Good. Barry, you said you had a great chart the other day looking at sort of algorithmic moves in markets, bull markets compared to the 90s, bull markets compared to the 20s. You said we've not hit that blow-off top, but we're on the way.
We are. If you look at the what's called the exponential trend, so it's an ascending curve, increasing at an increasing rate. That characterized the 1920s bull market. It characterized the 1990s. This one's been a lot more linear, and it doesn't have that upward sloping curve since the 2009 low. And so I find it hard to believe that we've seen the top because we haven't really entered that kind of parabolic move.
How would you know when we're close?
Well, you'll see the parabolic move. That'll be the first thing. Euphoria, a lot less doubt in the market. I had not been a bull for a long time. We were in defensives and bond proxies until last October. But when the Fed made their move and the president made his move on the balance sheet and the trade, respectively, we went with a more cyclical, pro-cyclical profile. We thought that some of the beat-up cyclicals, everything from technology to energy and industrials, would get a lift, and financials as well. So far, we've only had some luck on the technology and the financial call, but we do think as the cycle ages, we'll get more.
JJ, to that point, the fact that you had Alphabet enter the $1 trillion club yesterday, you now have Apple, Microsoft, Alphabet, Amazon, Facebook accounting for something like 19% of the S&P 500 index in terms of weighting. How contingent are these continued moves higher on this particular group continuing to drive it?
Yeah, it's amazing, Morgan. The FANG stocks are back in play. But I do think as we head into earnings season further, right now, obviously, all the momentum is there. I think what you're going to see is the chip stocks picking up even more. We have Intel and Texas Instruments starting next week, and we'll continue with the chip stocks going forward. They've had a couple of good weeks. And I think it's very interesting that as the fears around tariffs in China have come off, I think that's one of the reasons you've seen Apple really rally so much more, which takes all their component makers with them. But I think the other part of it is we all feared for chips for so long. They've performed fairly well, and I think they have an opportunity to continue to the upside, to continue the momentum in technology. And as Barry just said about the financials, there's not a single sector, in my opinion, that's had a harder time in terms of the macroeconomic environment in terms of headwinds, yet they continue to perform pretty well. Goldman and Wells Fargo might have had some disappointments, but those were very company-specific disappointments. Overall, it was still a very nice season for the financials.
JJ, for the folks playing at home, say you've been along this market the whole way through. What do you do here? I mean, do you have to take some profit so you got some dry powder if things do turn down? I mean, even if you do continue to believe in this rally, what's the best strategy?
You know, I think, John, that is a great part of it. I think particularly for your retail investors at home who are watching, so many times they think of things as all or none rather than partial. And I thought the most interesting thing from our client base last year is that actually Apple was a sell 9 of 12 months last year. People may say that's terrible, then your clients didn't participate. But actually what it means to me, don't forget, it's still our #1 held stock. So people were doing exactly that. Yes, did they get everything to its fullest value? No, but usually people who want to be the first one to the party or the last one at the party don't do very well. Taking some profits on the way up, so to your point, you have some dry powder for other investments, is usually a very smart way to go, and it's exactly how professionals invest.
Yeah, the tape has the fact that Apple's market cap is about to eclipse that of the entire Australian stock market. Barry, the title of your most recent report is The Power of Unlimited Free Money. Stay long cyclicals. So I guess one hypothetical would be, what do we do if we begin to hear Fed officials, other than Kaplan, let's say, start to lean into that? What if Powell says, don't get used to this, guys, this will not last forever?
Yeah, I would agree. I think we have come pretty far, pretty fast. We've eroded a lot of the recession fear, and that's accounted for the upside year to date. We've settled down the repo market, which the Fed shouldn't be injecting excess reserves at the same rate on a go-forward basis after the spring. So as the Fed throttles back, I think we might see some pullback here, but for the most part, we're more focused on the intra-cyclical rotation within the market. For instance, a weaker dollar call that would benefit energy industrial, and a 10-year yield moderate late-cycle reflation call, and that would help the financials. So we're focused more on sector shifting the deck chairs and less on S&P upside at this point.
Right. Don't use the shifting the deck chairs analogy. That's not usually not helpful. Yeah,
yeah, fair point. JJ,
we're always one iceberg away.
JJ, the fact that we've been having this debate about whether on a global level economic growth, their slowdown in growth has bottomed, where do you fall? What camp are you in? And I ask that in part because we got some pretty solid or at least stable data here in the U.S. this morning, but some commentary from some key industrial companies that have reported earnings in the last 12 hours that suggests that maybe we haven't been seeing a bottoming.
Well, this is going to obviously be a little bit tricky. And to your point, I was a little surprised that we saw some of those comments also, Morgan. But then you saw the numbers out of China. And even though we had, this slower annualized growth, we had the greatest month over month that we've seen in many, many years. So with that, I do think we still have these great opportunities. But I think for people looking, as John said earlier, playing along at home, I think it's unrealistic to think that we're going to continue just kind of going straight up. Just normal market trading back and forth, you would think we would have some sort of sell-off here, particularly as we have middle of the earnings season type of thing, because obviously some companies are going to come out with great statements. I think the expectations, the sort of whisper number, if you will, is a little bit higher. So I would expect we get some sort of a sell-off. I'm not saying we're going to have a 10% or any deck chair type sell-off, but maybe a 3% sell-off or so, just to kind of force a little bit of people out so that we can actually stabilize the market along with stabilizing growth.
All right, gentlemen, have a good weekend. We'll talk to you both soon, I hope. JJ Kinahan,
thanks, Carl.
Barry Bannister.
Thanks. All right, let's flip now to the bird. Peacock, Comcast, and NBC Universal are parent, unveiling the details of its coming streaming service set to launch nationwide July 15th and for Comcast subscribers in mid-April. It consists of over 7,500 hours of programming. That's ad-supported. The premium service is going to launch April 15th on a limited basis, $4.99 a month with commercials. Free, I guess, if you're a cable subscriber in a lot of places. $9.99 without commercials. Stephanie Mehta of Fast Company, Nilay Patel of The Verge join us now, both the editors of those shops. Stephanie, it seems to me like the question isn't, is Peacock just going to be successful? I think it's strategically, is it going to be successful enough to offset their kind of kneecapping syndication and the kind of digital download kind of pure profit that they would be getting not doing this? What do you think it's going to take for this to do strategically what this company needs to do?
I think that there's a lot of open questions here. First of all, this is the streaming service that was created by a network. There's no question that when you look at this, this doesn't have the sort of tech wizardry that you would expect from an Amazon or a Netflix, and it doesn't have the great content and the original programming slate right out of the gate that you might get from a company that wasn't necessarily just trying to monetize their library. I think that this is going to have to be a big home run for them, and in order to offset, as you say, some of the reputational damage and the damage they're going to take from cutting off syndication at the kneecap. The other challenge that these guys face is just how much advertising can they accrue to this platform in order to make it a success and to offset the finances that they're not going to get by offering it for free to people.
Yeah, I'm not sure, Neil. What is the game here? What is it that they got to do? Because it seems like raw subscribers, if you're a free service, selling stuff that people like, I mean, it's all of Law and Order. People ought to watch that. Is it engagement? Is it loyalty? Is it the ability to cross those people over into other products?
Well, I think it's two things. One, they have to offset the revenue that they were getting on a predictable basis from their cable operators. You can do that maybe by going to direct consumer. And then you're losing, as viewers move away from broadcast, you've got to offset some of those advertising dollars. I think the budgets we're seeing now go into the ad-supported streaming services are basically out of that experimental bucket that most big companies have, the I don't want to get it wrong and tell my board I missed something bucket, so we're just going to throw some money. Whether they re-up and come back for round 2 in year 2, completely open question. At The Verge, we have a thing that we call the Go 90 scale of doom streaming services, named after Verizon's Go 90. It's 0 and 90 is dead. And I think I peg all of these at like 45 on the scale of doom right now. They have to launch. The technology has to work. They've got to get people to download an app, which is a historically difficult thing to do. The average number of apps the average person downloads in a month is 0. So they've got to get over this hump. I think they're all looking at the Disney launch, which was based on The Mandalorian, based on Baby Yoda, based on the entire Disney empire looking at the screen and saying, Disney Plus is out now.
What are they going to do, Baby Shrek? What?
They don't have any of that stuff yet. I think these are all hard. I think that's why there's a free tier that's limited, just to get you to think, I should just poke around at this. But converting those early interests into subscribers, recurring subscribers who don't churn off, that's going to be hard for every single one of these services.
Well, we're going to definitely pay attention to downloads in the early days. But more interestingly is maybe it does open up. We thought we understood sort of where these streaming wars were falling out. But the argument now is ad-supported is a new front, right? That's going to create an additional wave of money in ways that maybe we weren't thinking about 6 months ago. You agree?
I think Nilay is right. This is an effort to get people to download the app and to poke around and to try it for free. I don't know if ad-supported is the long-term play here. I think it is the candy that gets people in the door. And, I agree. It's an open question as to whether or not these advertisers are going to say streaming is the way to go.
Do you think they're wedded to television?
I don't think they're wedded to television. I think that, if this is a conversation about advertising, there's a whole host of challenges that industry is going through. And none of the big agencies, none of the big CMOs have any of the answers. So I feel like traditional advertising in general is going through a massive disruption. And that's why you're seeing these big advertisers like P&G. They're sponsoring programming. They are not advertising. They are creating original programming that has them embedded in it, and they're creating some of the content that competes with stuff that you see on a streaming platform.
Exactly, and I think the most direct comparable in the marketplace right now, Nilay, is Hulu, which has said in the past that their most popular service is that ad-supported service. And Peacock has said it's going to include 10 different advertising formats, including shoppable ads, which sounds kind of interesting, binge ads, this idea that maybe an advertiser sponsors an ad-free show. So it does seem like there's experimental advertising, almost maybe more quality over quantity that's going to be experimented with here.
Yeah, I think that if you look at that list of formats, they're just trying to hit every point of the funnel.
Yep.
Right? Here's some brand advertising you can do. Here's some integration that makes you feel happy. And then here's the holy grail of all television. Here's a direct purchase because you saw something on the screen. Only the Home Shopping Network has ever done that on traditional television. Okay, maybe this service is going to kill the Home Shopping Network. The real question here is you do those formats, you do all that experimentation because right now you have 0 users. Until they have any data about what people are watching, whether that library is driving people like Friends used to drive people to Netflix, whether they can even capture share back from Netflix, YouTube, Instagram, the things that people are spending.
Well, let's just be clear. A cable company has no problem with their data, right? They know the customer probably arguably than Disney does.
I don't know. I think that shift to watching it on a phone, a shift to watching it when the other apps are right there on the screen, I think it's going to be more disruptive than anybody is really giving it credit for. And when I talk to these executives, the overwhelming sense I get, for better or worse, I mean, they're selling these, so they're confident, but they all talk like they've already won. They've all talked like they already know how consumer behavior is going to shift. And if anything has proven to be correct as people spend more time on their phones, is that you have no idea. Right. TikTok is the most successful streaming service launch of the past year. And as far as I can tell, it's like teenagers jumping up and down.
Yeah, well, teenagers like to watch teenagers jumping up and down. And the rest of us sometimes too, I guess. I don't know. Let's expand the conversation and fold in Facebook, which is dialing back its efforts in scripted content, rethinking its strategy on placing ads within WhatsApp, and now facing renewed attacks from several politicians, including presidential candidates Andrew Yang and Pete Buttigieg, along with House Speaker Nancy Pelosi. Take a listen.
The Facebook business model is strictly to make money. They don't care about the impact on children. They don't care about truth. All they want are their tax cuts and no antitrust action against them. And they schmooze this administration in that regard because so far that's what they have received. But I think that what they have said very blatantly, very clearly, that they intend to be accomplices for misleading the American people with money from God knows where.
I think Facebook might put that differently. Stephanie, it's interesting to me, first on the content front, that Facebook is stepping back from scripted content just as NBC is leaning into it. When Facebook has the answers to the things, a lot of the things that NBC has question marks about. They've already got people downloading a bunch of apps. They already have one of the two monster digital ad networks out there. Why do you think they didn't just invest billions in content and do Peacock themselves?
Well, I think the broader context of all of the things that we're going to be talking about with regard to Facebook, whether it's how they police political ads, how they approach original scripted content, I think they are trying to say we are not a media company. All of these things to me signal we are not in the media business. We are a tech company. We are a utility. We are just the platform. And so I'm not saying that they're pulling back on scripted because they're trying to send a signal that they're not a media company, but I think that is a consequence of not behaving like a media company. I think a company that had media executives and they haven't made the moves that an Apple or an Amazon have to hire a really high profile Hollywood person in there. Right? There isn't somebody in there who comes from that world who can say, no, like, give me that data and give me some creatives and give me license to go out and build this. I think this has been an experiment, like a lot of other things, and they tried and clearly they failed.
And Eli, meanwhile, Pete Buttigieg, we're just showing it on the screen, channeling his inner Kanye West, saying no one man should have all that power that Mark Zuckerberg has, which to me is ironic because this guy's running for president. Yeah. Which we used to call the most powerful man in the world. He's saying Mark Zuckerberg's too powerful.
Well, regardless of what's happening with the president right now, traditionally American presidents have had better governance structures around them than Mark Zuckerberg, right? I mean, that's actually real. He's the sole single controlling shareholder of the company. No matter how many shareholder votes are taken against him, they all fail because he casts his vote against them. Like, he does have an enormous amount of actual power over the company, and the company owns one of the biggest and most powerful information distribution systems that has ever been created in the history of the world. Whether that's a media company or a tech platform or not, it is just true that if Facebook's algorithm decides to show everybody something, those people will see it. Whether that stuff should be scripted programming at a high level because they wanted to compete with Netflix for 5 minutes, whether it's their doomed Facebook video program because they wanted to compete with YouTube for 5 minutes, they're going to try that stuff, but their belief fundamentally is in that algorithm, that anything will be successful if they use the algorithm to their advantage.
Speaking of trying things, let's talk Twitter quickly. Jack Dorsey asking Elon Musk at Twitter's kind of all-hands retreat how he would fix or change the social network. Musk's answer, in short, identify the bots. Is that a fix?
Yeah, absolutely. I mean, what is the biggest problem with Twitter is you have no idea who's real or who's fake, what's being amplified by bots from whatever country or whatever interest group wants to amplify their message right now. Elon himself is dogged by like the Tesla Q bots that exist. There was the Never Warren hashtag, where the top 3 posts in the hashtag were people saying this hashtag is dumb, but bots amplified it to #1 in trending. Twitter has the same problems. I think we're all just more comfortable that we can kind of see what's going on because you can switch your timeline to RevCron. You can filter that timeline as a person a little more carefully than you can with Facebook, so it appears to be more transparent. But I think for the average user, it's still really hard.
Today, UBS cuts it to neutral, Stephanie, and their point is this should be a year, given the Olympics and the election, where Twitter should thrive. Instead, this ad bug that haunted them in 2019 puts them in an investment headwind for this year. Is that anything wrong with that narrative?
The UBS narrative or the
Twitter the UBS narrative, that they're having to spend money to fix their problems rather than enjoying what should be a banner environment.
Yeah, no, I think it's right to be skeptical. I mean, it should be a banner year for them, but, this is a company that has to fix its ad problems. Elon pointed out a very real situation that could drive users away. I mean, there's nothing that should guarantee Twitter's success or any of these companies' successes, and so I think it's right for investors to take a close look and peek under the hood.
Is there actually reason, Nilay, to think that Twitter is going to do away with the bots or make the ability to sign in and log on and use Twitter? A stronger process? Elon's not the first person to say this. People have been calling for this for years.
Yeah, I think we have all criticized Twitter for not building a lot of product. I would still like that edit button. Jack Dorsey said that's probably not going to happen this week.
You say that every time you come on here.
I got one. There's only one reason to come on your show, and it's to advocate for
And I'm here to say no.
Look, I'm right. That's just the facts. They've actually done a good job over the past year getting their platform to a place where they can iterate correctly. Kayvon Bakepor is their head of product. I talked to him recently. He was at CES talking to some folks. They are moving faster, and they are proud of the fact that they're moving faster. I think those two things have not necessarily been true at the same time at Twitter in the past, so we'll see. I think they still have a lot of work to do to make it healthier, right. But you can see they're rolling out features here and there at a much faster clip than before.
But we're going to move a bit faster to a lot still to get to in the show. Great to have you guys. Nilay Patel of The Verge, Stephanie Mehta of Fast Company.
Still to come, China's Phoenix Tree going public here behind us this morning. We'll talk to the executive chair. NASDAQ's gone negative, and the Dow, which was up 76, now up 7.
You leave it to me.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Rainy, 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 rainy.
Sergey, why are you in such good mood?
It's raining.
And?
Rain means we take mere pups to cinema, and cinema means they'll be entertained.
Ah, and entertained means they're also quiet for a couple of hours. Oh, let's go. Enjoy 2-for-1 cinema tickets from Meerkat Movies when you buy through Compare the Market.
Qualifying purchases Tuesdays or Wednesdays, participating cinemas, 2 standard tickets only, cheapest ticket free, T's and C's apply.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. At all protected.
Down the middle of the 10. Got to the 5. Tumbles in. Touchdown.
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Puts his head down, crashes and spins and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Welcome back to Squawk Alley. China's Phoenix Tree Holding opening for trading earlier here at the New York Stock Exchange. Shares are currently trading down about 2%. Chairman Derek Shen joins us now here at Post 9. Derek, congratulations. Welcome.
Oh, thank you so much.
So let's talk a little bit about Phoenix Tree. You do co-living in China. What does that business model entail?
We are one of the largest co-living platforms in China, and with the fastest growth. By the end of November, we have more than 432,000 apartment units in China. The idea is we got a 3 or 2 bedroom apartment and put the digital lock for each door. So basically convert a 3 bedroom apartment into 3 apartment units, and people share the living room. So that's the idea, to help young people to cut the rent by more than half.
So headline just today that Hong Kong IPOs are happening at the fastest pace in 18 months. Why did you decide to go public here?
I used to study here. I like U.S., so I think the U.S. market can give us a big, branding exposure.
I'm reading through the document here, and I can't help but think of WeWork. Don't take that the wrong way, but I think a lot of investors are going to do that, especially because you're growing quickly, you're investing a lot, you're not profitable. How does this model eventually end up working to your advantage, and when?
Sure. Talk about WeWork, there's a huge difference between us and WeWork. WeWork is for the commercial, rental business. But for us, residential rental. Residential rental is a strong need. There are a lot of people in China. The market is huge. Right? The residential rental market in 2018 is 1.8 trillion RMB. Right? And the number will grow to 5 trillion RMB. And the institution like us only contribute 2% of the whole market. So significant opportunity for us. And talk about, for the future, how to make it working. As long as our unit economy is working, so once we have enough unit and keep on grow fast, eventually we can become profitable.
Is this mostly in primary cities, secondary cities? I mean, it's an urban story mostly, right?
Yeah, that's a good question. Actually, we target on the tier 1 and tier 2 city. There are more than 500 cities in China, and tier 1, tier 2 city 37 cities. We already entered 13 of them.
Obviously, it's a big week for U.S.-China relations. How soon do you expect to see any positive fallout from Phase 1, and how would that be reflected in your business?
I'm not an expert there, but for me, we concentrate on the China. As long as the Chinese economy keep on going up, and I'm very bullish about China economy. So as long as the China economy keep on going up, our business will be very good.
How closely are you watching some of the demographic data, though? And we had that birth rate that hit an almost 60-year low that was released overnight for China last year. I mean, is that something like that a concern?
Yeah, like I said before, the residential rental market is huge in China. Again, it's 1.8 trillion RMB 2 years ago, right? Plus, there are several key drivers power the growth of the whole market. One is high housing price. Another one is continued urbanization. People just flowing, from the 3rd, 4th tier city to tier 1, tier 2 city, right? And also another change is the mindset. Young people, before us, you have to buy a property to get married. But now young people, they want to rent for a long time. That's a huge plus for us. So by the end, another key driver is the Chinese government strongly support residential rental market. Maybe one of the reasons is because the housing price is too high.
All right. Derek, thanks for joining us today. Phoenix Tree Holdings going public earlier. Shares are trading down about 2%.
All right. Thank you so much.
And time now for a news update. Sue Herrera has it at headquarters. Sue.
John, thank you very much. Here's what's happening at this hour, everyone. Icy conditions at the Kansas City International Airport causing a Delta Airlines plane to skid off the runway. It was set to depart for Detroit when one wheel slipped off the pavement, causing the aircraft to skid. But all 129 passengers were taken off the plane, and luckily nobody was hurt. Harvey Weinstein appearing in court for another day of jury selection. More than half of the pool of 600 jurors have been dismissed. 8 jurors have been picked. Weinstein has pleaded not guilty to sexual assault charges. Bose is closing its doors. The maker of headphones, speakers, and other audio products, closing all of its retail locations and laying off hundreds of employees. It says most of its customers are now buying online. And Betty White turns 98 years young today. The 6-time Emmy winner telling Parade magazine, the secret to a long life is to accentuate the positive, not the negative. That's according to CNN. White's career has lasted more than 7 decades with appearances on both The Small and the big screen. And we wish her a very happy birthday and many more. You're up to date, guys. That's the news update this hour. Have a great weekend. It's a great football weekend, Carl. Right?
It is. I thought Morgan was going to say something.
I was going to start singing "Thank You for Being a Friend."
Oh, there you
one
go.
One of the greatest shows of all time, the Golden Girls. But then I see you've got this cheese head.
Yes, I am rooting for the Packers.
Direction.
I'm rooting for the Packers.
That's going to be a great weekend.
Oh, my goodness.
Yeah.
Have a good one.
Thanks, Sue.
You're welcome.
When we come back, the former VP of Content at Netflix will join us to weigh in on Peacock when Squawk Alley's back in a minute.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, small jobs, big jobs, work from home and your PJs jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Turn back to Peacock after that announcement yesterday. Comcast revealed the details behind its new streaming play, set to launch nationwide July 15. Stock hits an all-time high this morning. Executives detailed that Peacock will offer a free ad-supported option, as well as 2 premium pricing tiers. This is NBC Universal CEO Jeff Shell about the company's content investments.
I'm pretty confident when you combine all of this content with our proven ability to market and launch new products with Symphony, and then what I think is a really smart strategy of taking light advertising and bundling to create this unbelievable experience free for consumers. This is going to be a very successful product and is going to be one of the key elements of growth for NBC Universal going forward.
Joining us this morning, former VP of Content at Netflix, Elizabeth Bradley. She helped bring a number of new international shows to that platform during her tenure there. Elizabeth, great to have you back. Good morning.
Thanks for having me. Good morning, Carl.
I wonder what you think of how our parent company, is approaching this both strategically and tactically.
Well, I think it's exciting for NBC to get into the fray, and obviously the entire industry is shifting to an on-demand model. I think there's no question that's what consumers have been responding to. So it's time for NBC to jump in. The challenge for them certainly is, as you mentioned, it's a July 15th launch, which makes them kind of the latest even in the launching in 2020. services. So we'll still have a couple more services coming online prior to, so HBO Max will come online this spring, Quibi, which is the short form player before, then Peacock will come online. And the name still makes me smile a little bit each time, Peacock, July 15th. So I'm working on making that a comfortable name to say all the time.
The Bulls would argue, I think, that if Disney used The Mandalorian and the Star Wars franchise as early rocket fuel, that Comcast will do the same thing with the Olympics. How powerful is that?
Well, I think live viewing is one of the great unknowns as we move into this on-demand universe. So you're absolutely right that it's a arrow in the quiver of NBC that differentiates it. Every time the Olympics come on, the world stops to enjoy premier athletes. So it'll be interesting to see, I think, exactly as you said, plays like The Mandalorian, that's an on-demand show that you can watch multiple episodes when you want. The Olympics is a live event that usually you don't want to see it 3 days after someone won a gold medal. So it's a bit different. It'll be interesting to see exactly how it's leveraged on Peacock.
Elizabeth, what's the game here for NBC Universal and Comcast, though? I mean, I know we tend to count subscribers, but they're not going mainly for that subscription fee. They're going for advertising. So is it the one advertising platform across all the different media that people should really be concerned about? Is it engagement trends, their ability to surface gems in the library? What?
Well, it's a little bit of all of those. You're exactly right that having advertising is the only, they're one of the only platforms doing that. Hulu obviously has had an ad-supported offering for a long time. Outside of that, everyone else has chosen to be a subscription-only model. So NBC was clear yesterday in that announcement you guys have shown that they want to leverage having a product for advertisers and take advantage of that revenue stream in addition to having a subscription model. So it'll be interesting to see who responds in what way. Hulu has articulated in the past that the majority of their users do use the ad-supported model. So if NBC is able to effectively leverage both revenue streams, that's a nice differentiator for them. I think it's challenging in a space where consumers are getting more used to watching when they want, how they want. Obviously, the DVR has changed how we all even watch advertising in the programs that we watch on demand. So it's a different type of service to offer, and we'll see exactly how consumers respond to that.
Elizabeth, I want to dig into the point you just made about sports a little bit more, because it seems to me that it's sports and it's news that have continued to make the value case, make the proposition for linear TV. ESPN, certainly ESPN Plus was, one of the early test cases for bringing sports to streaming. Between what's going to happen with this Peacock service, how do you think that's going to evolve, and what does it do to those cable subscriptions?
Well, Morgan, I think that's honestly the most interesting part of what's to come in the next couple years in terms of on-demand and streaming players. As you'd mentioned, ESPN Plus has come online, but the major professional sporting league rights that ESPN has don't get necessarily streamed without having a cable subscription. So NBC and Peacock coming into the fray, we'll see the Olympics are always a huge event, and then they did announce yesterday that they will have some Premier League rights that they'll be able to show to U.S. consumers online. So that sports play, I think, is really what we will have to see. If you look even in the last 6 months, some of the top-rated linear ratings, meaning people watching networks, of course, is still on sports. We're, of course, going into playoffs this weekend in the NFL. Those will be on linear networks. Those are not on-demand plays at this point. So how that evolves, I think, is the great unknown. What happens to NBA rights, to MLB rights, to hockey rights? And so we're going to have to see, obviously, the NCAA, a huge draw for lots of networks, for TNT and CBS as March Madness comes up. So at this point, that world hasn't transitioned on demand. And honestly, Peacock looks like they're going to be one of the first offerings this summer with the Olympics in July, and then some. They announced the soccer that they'll be airing in August, in addition to Ryder Cup in September. So we'll see how that does work when you put it in an on-demand play when it's a live sporting event. And that's where the advertising play will hopefully really differentiate them.
Finally, it has dredged up the age-old question about whether or not Netflix and Reed would ever reverse course and follow suit, get into the ad-supported space. You seem qualified to answer that question. Would they?
Well, I think for every player, you have to look at your overall business model. and what you're trying to achieve. If you think of Amazon thinking about leveraging their entire Amazon shopping network, and each player has to think about that differently. So at this point, Netflix has a business model they've succeeded with, obviously, and they're continuing to try to expand globally. So I don't know that shifting course in your business model at this point is necessarily in their cards, but we'll see. I think everyone will be watching Peacock to get a good sense of how does the advertising component affect viewership and the response of consumers.
Always great guidance, Elizabeth. Thanks so much.
Thank you for having me.
Elizabeth Bradley.
Taking a look at the major averages right now, after hitting record intraday highs, those gains are largely fading for the Dow, the S&P, and the NASDAQ. Keep in mind, though, the Dow and S&P are still on pace as of right now for the largest weekly gain in 5 months. We're back in a minute.
Sundown Vitamins are all non-GMO.
Got big plans for 2020? Capture and share every highlight on a gorgeous iPhone 11 with an ultra-wide camera. In Tesco Mobile's big January sale, you can get the latest iPhone for £40.75 a month with double data. That's a mighty 20 gigs. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Ends 26th of January. Was 10 gigs, now 20 gigs. 36-month credit and rolling monthly usage agreements with Tesco Mobile required. Subject to status. Phase policy applies. See tescomobile.com/terms.
At Ring, we've reinvented the doorbell. So no matter where you are, or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Could you leave it with my neighbour, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Rainy, 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 rainy.
Sergey, why in such good mood?
It's raining.
And?
Rain means we take mere pups to cinema. And cinema means they'll be entertained.
Ah, and entertained means they're also quiet for a couple of hours. Oh, let's go. Enjoy 2-for-1 cinema tickets from Meerkat Movies when you buy through Compare the Market.
Qualifying purchases Tuesdays or Wednesdays, participating cinemas, 2 standard tickets only, cheapest ticket free, T's and C's apply.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. At all protected.
Down the middle of the 10. Got to the 5. Tumbles in. Touchdown.
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Puts his head down, crashes and spins, and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
Dow slipping back towards the flat line, only up 29 points right now. As a reminder, as we head to break, can't get enough Squawk Alley? You can watch or listen to us live or anytime on the go on the CNBC app. Download it today and don't go anywhere. We're back in a moment.
At Fidelity, you might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in. Touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner! Slam dunk LeBron!
Harden steps left. He shoots for 3, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
I'm Scott Wapner. Here's what's coming up top of the hour on the Halftime Report. I'll have new details on David Tepper's market thoughts, including when he got more bullish and why. Plus, the $1 trillion club gets a new member in Google. So is it a sign of more gains to come, or that some big tech stocks are now too crowded? And Pete's been doing some call buying in a name that's gotten smoked lately. We're going to tell you what it is in unusual activity. The Halftime Report starts at noon. John, that means we're less than 15 away. We'll see you then.
All right, we will see you then, Scott. Thanks. Tech, meanwhile, continuing to fuel the broader market rally, the sector up 50% in the past year. Cloud stocks are among the gainers. Take a look at the First Trust Cloud Computing ETF. The ticker is SKYY. It includes names like Google, Amazon, and Microsoft, and that ETF's on pace for its fifth positive week. For a closer look at the competitive cloud space, we are joined now by Crystal Belmont, taking over at cloud data integration company Talend last week. Crystal, good to see you. Welcome.
Thank you. Thank you for having me.
Now, what do you expect as you're coming into Talend? You've been in the space, software as a service for a long time. We're at Concur, pre and post SAP. What do you expect in this multi-cloud world is going to be the definer of success in 2020?
Well, look, I'm very excited to be at Talend, and Talend is a global cloud data integration company that focuses on a real problem that I think is the hottest thing right now, which is data is at the heart of every conversation that's going on for companies, and having data that's in a usable, secure, accurate format and being able to put that in the hands of companies to make great business decisions, I think that's going to fuel a lot of the conversations that come up in the future.
So this year, we're hearing Amazon, Microsoft, Google leaders all talking about in their cloud operations, they are scaling up their sales forces. Now, a lot of your legacy is in driving revenue, so you know how important those sales forces are. How important is it to either latch on to one of those big players if you're a smaller player in the space like you are, or, I mean, are you just going to get trampled?
Well, listen, they are all great partners of ours, and they're an important part of the ecosystem. And I think at this point, when you look at a place where Talend's at right now at $250 million and heading to $1 billion, this is all about scale. And so it's an important part of our growth history, and it's an important part of our growth future.
You are a bit unusual, unfortunately, in that you are a successful female enterprise executive who's taking the reins as CEO. Even more unusual is you're bringing a couple of senior female enterprise executives with you. Tell the story for a moment about what opened up the opportunity for that move and perhaps the message it sends.
Well, listen, I look at this first and foremost by what is the role and what is the opportunity to step into the CEO shoes and take the reins and move this organization and the company to $1 billion and beyond. And when I look at that, I look around me and look at the existing leadership team and how we can complement that and where are there gaps in the leadership team, and placing a CRO and then also putting a customer first approach into our chief customer officer. Both first and foremost is about picking people that have a reputation and have history in performing and scaling businesses in cloud functions. And so this was first about finding the right people for the role. I'm happy to be a trailblazer and making sure that we bring diversity to a leadership team and we continue to expand those horizons. 5 out of 8 of our executive leaders are women. And so I would say that's a data point, but the primary thing is the fact that these are people that bring a significant amount of skills and reputation to the roles and the functions that talent needs.
Crystal, I want to go back to the fact that you're partnering with the big 3 cloud providers and why that strategy, why you see that strategy as such a growth strategy. This idea that organizations are using multiple clouds, it's not necessarily winner takes all. How do you see that evolving, and why is that such a strong opportunity as more and more companies become digital?
Yeah, I think it's a great question. I mean, listen, this is an ecosystem that continues to change. And I think the position that each of these organizations, including Talend, is in is to not just look at what the current state is in terms of, what the needs are in the market, but really where the market's going and what will the obligations and opportunities be for us to play an important role in it. So when I look at specifically at data, the thing that all of us are looking at how we solve problems around is data is an asset in its best use case, but the reality is it's become somewhat of a liability and a risk in terms of GDPR and some of the other obligations and regulatory concerns. And so we're all looking for ways to make sure that we can take what is a valuable asset and make that really important and a competitive advantage to the customers we serve.
Right. Well, you got a lot to do. It's a hot area. Crystal Belmont, thanks for being with us.
Thank you so much for having me.
Still to come here on Squawk Alley, Microsoft Chief Satya Nadella weighing in on the Apple FBI controversy. We'll tell you what he said after the break. We're back at 2.
Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Do you go on the same holiday every year? To the same country, in the same hotel, with the same sea view, visit the same ancient monuments, lay by the same dolphin-shaped pool, meet the same Barrys and Sandras, and wear the same Hawaiian shirt that you'd never wear at home? Then maybe it's time to switch it up. Starting with the all-new Vauxhall Corsa, with its bold styling and up to 70 miles per gallon. To switch it up, visit your local Vauxhall dealership or search New Corsa. Official WLTP test figures for comparison purposes only. Real-world figures may vary.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes in over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
It's been a nonstop series of record highs and price target upgrades all week long. Dow did top out 76 points to the upside, but settled back a bit. We're hanging into 33.22. We're back in less than 3 minutes.
He's a systems quarterback.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner! Slam dunk LeBron!
Harden steps left. He shoots for three, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
The unknown, where we must stand with confidence and grit. And as history teaches, when we go to these places, it's best to go in boots. Find your pair at Tecovas, Western Goods for New Frontiers.
These days, my eyesight's changing faster than my hair color. But thanks to my VSP individual vision plan, I'll always save on quality eye exams and glasses. In fact, you'll save an average of $200 each year when you find a plan at VSPdirect.com.
Ready or not, here I come.
Music that moves you. Try it for yourself. Introducing 30-day home trial. Peloton.
Doing the things we love can be painful. Aspercream's triple effect provides targeted relief, works in minutes, lasts for hours. Love hurts. Aspercream works.
At Fidelity, online U.S. stocks and ETFs are commission-free. And when you open a new brokerage account, your cash is automatically invested at a great rate. That's why Fidelity leads the industry in value, while our competition continues to talk.
Sometimes the pressures of today's world can make it tough to take care of yourself, but Nature's Bounty has innovative ways to help you maintain balance and help keep you active and well-rested. Because, hey, tomorrow's coming up fast. Nature's Bounty, because you're better off healthy.
We think about the long term.
AI will change 100% of jobs.
With some people in negotiations, the best technique is to act half crazy.
The biggest names in business are on CNBC.
By 2030, to become carbon negative, to in fact go back in history all the way to our founding in 1975, look at all of our energy consumption from electricity and other sources, and make sure that we recapture that. And of course, we also know that it's not just about what we do, it's the ecosystem and the innovation. We need breakthroughs, so we're even putting $1 billion in an innovation fund. So we're very excited. We know it's a small part, quite frankly, of what all of us will have to do to achieve more.
In case you missed it, that was Microsoft's Satya Nadella with Cramer last night, taking a strong stance on climate change, saying the company will be carbon negative by 2030. Also waded into the Apple DOJ controversy over privacy. Take a listen to that.
both things matter here. The two things being privacy. As a citizen, as a user, I care deeply about privacy. And as a citizen, I also care about public safety.
Right.
So both of these have to be in balance. And I think we have to come up with legislative mechanisms for that. Things like backdoors and so on are just bad ideas. But like the Cloud Act, which is a completely different realm today, is actually a good first step.
Fascinating to hear him weigh in on that. Some of these carbon targets for 2050 are fascinating.
Yeah.
Giving Ballmer some credit for cloud. A lot of going on.
Ballmer deserves a lot of credit for cloud. I mean, he worked for Ballmer, Satya did, as the head of server and tools that evolved into cloud. I would argue Steve Ballmer doesn't get enough credit for that stuff. As for what he was saying about the DOJ, legislative mechanisms, I take that as sort of a euphemism for stop trying to shake us down for user data and back. Government, right? There should be clear rules, clear guidelines that citizens and companies can understand for how this is supposed to go and even appeal if they need to.
Yeah, the climate change conversation certainly is key, especially when you fold it into the bigger, broader ESG debate that's been rippling across corporate America and Wall Street. And as we get ready for Davos next week, because that's going to be big on the docket there. But finally, before we go, how about Amazon chief Jeff Bezos making his red carpet debut at a couple with girlfriend Lauren Sanchez. The two were in Mumbai for an Amazon Prime event, and that's the video of them right there. You know, this kind of brings me back to that whole rental debate where men are concerned when I see a very statement-esque jacket like that.
I'm thinking he did not buy that on Amazon. I'm going to go out on a limb.
Well, third party. His sartorial choices are getting more and more interesting. As Morgan said, Davos next week, along with IBM, Netflix, UAL, and a lot more. Have a good long weekend. Let's get to the judge.
All right, Carl, thanks. I'm Scott Wapner, front and center this hour. The bull run for stocks and the big name investors who tell CNBC they are staying long. What it means to your money. It is 12 noon on this Friday, and this is the halftime report.
Riding the record rally, how the smart money is playing the bull run and the stocks they're buying. $1 trillion winner. Alphabet joining Apple, Microsoft, and Amazon in that exclusive club. It's also the best performing FANG stock right now. Will that continue? Snap getting off to a flying start, up 15% since the beginning of the year. And it just got a huge upgrade. It's our call of the day. Netflix, IBM, Intel, and more. A ton of big names report earnings next week. We'll get you set up. The investment committee is ready to go. Halftime report starts right now.
All right, good to have you with us on this Friday. Our investment committee here today, Jim Lebenthal, Josh Brown, Steve Weiss, and Shannon Sakosha is the Chief Investment Officer at Boston Private Wealth. Let's begin with the markets. The S&P has set another new record high today. All three of the major averages, in fact, doing so. And word this morning from Appaloosa's David Tepper that he is still bullish on the market. Tepper telling CNBC, quote, "I love riding a horse that's running. We have been long and continue that way. At some point, the market will get to a level that I will slow down. That horse will eventually get off." Well, I've got some more context on this from a source who tells me that Tepper got more fully invested in December. I'm told it was his typical playbook. The Fed put money into the system, China tensions had eased, and that the signs seemed pretty clear to him about where the market was going to go, whereas there was a lack of clarity in the months before that because of all the noise around trade. I'm told Appaloosa outperformed in December. They're outperforming in January. It is also probably a fair bet that Tepper's been adding to his individual positions as well. He doesn't have a huge book of stocks, but if he thought the market was going to run, the likes of Micron, Amazon, Alibaba, Alphabet, Facebook could be where some of his money would be going beyond a pure play on the market itself. Now, Stan Druckenmiller says as well to CNBC today that he is still bullish on the market intermediate term. So, Weiss, I turn to you. This seems pretty simple way of thinking, and that's what makes David Tepper who he is. The numbers, his numbers, speak for themselves, but it's his ability to take everything and distill it down to the most simple thing. The Fed is your friend. The Fed's putting more money in the system. China tensions have eased. It's time to be bullish.
Yeah, so that's
that's the way Dave's been thinking. And the other thing is that people like Dave, but Dave in particular, more than anybody I know, makes big, big bets. So when he's got confidence in his thesis, which he does now, as you know, he's going to put the money there. He's going to put it to work. He's going to put it to work in liquid names because he's crazy about liquidity and managing risk. So in my conversations with him, he thinks that basically, now it depends, of course, how fast the market gets there, how fast it moves. But until you get some noise around the presidential elections, so you're good until at least March, and then you could reassess. Now, of course, the market goes up 10% between now and then. That's different. But if you go back to what he was saying last year, you can see a market with a multiple of 22 times. I don't know if you see it now or 24 times, given where rates are. And if you get the earnings to pad that growth, to pad the action, liquidity the Fed's doing, then you can move up to that kind of multiple. So I don't think anybody thinks it's really expensive now. I don't believe Dave thinks it is. Of course, value players may, but it's a momentum market. So momentum is moving it. Early earnings reports been, I'd say, on balance, pretty good. Some today, from all parts of the economy. So I'm invested.
So David Tepper and Stanley Druckenmiller are managing their own money for the most part, or pretty much all the way. Do you think that it's different if you're doing that versus you have to answer to clients, meaning you could change your mind really quickly and you don't have to explain it to anyone, and maybe that gives you an advantage?
Well, that's true with Druck. I don't know that it's true with Dave, but no, this is the way Dave runs it. And Dave's view has always been, first of all, he's given back so much capital over the last years.
That's what I mean.
So if people want to be there for it, fine. If they don't. But if you put $1 with him when he started, at his 20-year anniversary, it was worth $150.
Yeah, it's
so
insane.
Who's going to turn it away, right?
There's a reason why, I guess you could say, there's a reason why he has a pair of something on his desk.
Yes.
That I'm told are still there.
It's the anatomy of a bull.
You said it, though. It's one thing to think the market may be going up. It's another thing entirely to be able to act on it. It's not rocket science, maybe, that you thought, okay, the Fed's here again. That's what you need at your back. The Fed's at play. China tensions are easing. But it's not only the ability to see that, it's the ability to put a lot of money to work. And that's what I'm told happened in December. The ability to be more bullish than he was in the past because some obstacles, hurdles, whatever you want to call them, had been cleared.
And he's done that before, right? I mean, he did that a year ago, right? December of 2018. Wasn't his the day after Christmas call? But I think we have to be careful about equating what David Tepper or somebody of his ilk is doing to what the individual investor or most watchers of the show should be doing. And I've been saying this for a couple of weeks now. I think instead of taking huge bets, you have to be disciplined and rebalancing. That can be from an asset allocation point of view. I mean, after last year, there's no way that you're not imbalanced equities versus bonds to whatever your strategic asset allocation is. Or in my case, as an equity portfolio manager, trimming the winners and adding to those things that maybe haven't performed as well.
Don't take it so much as kind of what he's buying or how much of whatever he's buying. It's more, to me, a sentiment idea about the market itself.
I will definitely
where the
agree with
longer term, whatever, intermediate term, whatever, direction of the market is going to go. You manage your own portfolio, whatever you want to do.
I've been telling clients there's a couple of things going for the markets right now. You just listed them. It's the Fed and the easing of trade tensions. And there's some things that are against the market, some risks, one being the election, the other being geopolitics. When you put those two together, the benefits outweigh the risks. The question,
by far.
Yes, but the question that I have, and I think we should all have, is has that been priced in? There's that ephemeral quote that we have. Is it priced in? And there's no way of knowing. So in the absence of knowing whether it's priced in or not, it just makes sense to me to continually trim. You still have monies in your winners.
The market is speaking to you, though, almost on a daily basis that it's not priced in.
Until it stops.
But here's
until
the
it
thing.
Stops.
Here's what Dave always says, okay? There's a time to play and there's a time not to play. He's saying this is time to play. He has no problem doing what you guys can't do, which is you can do it, but being in cash, or being completely market neutral at some point in time. But he's saying now's the time to take advantage of it. Now, you don't get these events all that often. I see it now. Now, to your point, you can't really follow him because he could turn around on a dime and buy all the outstanding futures contracts out there or short them. to hedge himself these things.
And we'll find out a month later. But I want to make it clear, I'm not making a market call.
Find out.
I'm not. If I am making a market call, it's what I said earlier, that the benefits outweigh the risks. All I'm saying is you can't ignore the torrid nature of the rally, both in the market and in particular individual stocks. And if you are not disciplined and rebalancing both amongst asset classes and within stocks, you might be you're probably going to be disappointed at some point.
Hold your thoughts just for 1 second. Let's jump over to Steve Leisman. He has one of those rapid updates that we like to get into our program whenever they happen. Steve, what do you have for us?
Yeah, really interesting example, Scott, of two forces in the economy. On the one hand, you have the blowout housing number pushing up growth. On the other hand, you had that industrial production miss, which pulled it down. And the result is even, but I want to show you where we are because it's very interesting. We're at 2.1% for fourth quarter GDP, 2.1 with a forecast of 1.6 for the first quarter. Now that 2.1 is a pretty good number considering we started the quarter around 1.5. So on balance, as this market has come up, the economic data has been good. And I just got to ask you one question, Scott. One thing with Tepper talking about, he came in with the Fed. Did he go into home builders? Because if you look at it, the home builders have outperformed, and you had that blowout housing number this morning, the housing starts, that was up 17%. We're now at a level back at 2006. So if you're going to come in with the Fed and easier money, you'd wonder if you'd go into the sector that is the most interest rate sensitive, and that seems to be the housing index.
Yeah, I couldn't answer your question. I wish I could. I just don't know, Steve, but perhaps we'll find out some weeks from now. Who knows? Steve, thanks for that.
Pleasure.
All right, let's back to our conversation, Shannon.
So, I mean, I think there's a number of things that are happening here. And I like Jim's caveat where we think about it in terms of this is not the way a traditional investor would react. But I think to your point, Scott, sentiment has clearly shifted over the course of the last several weeks. And it's not actually just monetary easing here in the United States. It's continued easy policy outside of the United States. The Chinese data that came out today, look past the GDP number because nobody feels very high conviction that isn't that's really true GDP, but, fixed asset investment, retail sales. China is starting to see that acceleration that we haven't quite yet seen here in the United States. And I think that that's going to be the basis, along with the Brexit situation really becoming more of a logistical concern rather than a market concern, that, there could be continued enthusiasm. The other thing that I would point out is that there's a lot of talk about, the U.S. moving kind of to the back burner from an economic growth perspective, not leading the charge in 2020, and that giving some credence to why you should be in international developed and emerging market stocks. I don't think it's a binary decision. I don't think you necessarily have to move out of U.S. stocks to fund additional allocations in international and emerging market stocks. Given the amount of money that went into cash and bonds last year, there's plenty of money to fund some additional equity allocation if investors are looking to do that.
All right, Josh, so let's sort of get your broader market thoughts. Well, you are coming off of a guy like, Tepper kind of laying it out that it's simple. Fed, no more trade tensions, at least for right now. Why be anything but positive the market?
I think what's interesting is that, our process is the polar opposite of what the Teppers of the world do. We're not smart enough to do what Tepper does.
But you think about the market the same way perhaps he does, do you not?
No.
You're not. So you're not. Are you bullish the market right now?
You will never see me add to clients' equity exposure because I feel good about what the Fed is about.
That's fine. Are you positive the market right now?
Yes.
Why?
Well, we've been all year. We're rules based, so we make tactical shifts on trend. Trend has kept you in the market. There's never been a moment where trend had you out of the market. So forget about January. This feels good. The entire 12-month period that we're now lapping, the technicals kept you in. And what's really interesting is that the technicals continue to get even better. Let me give you a couple quick examples. Utilities just had a plus 3% week and hit an all-time high. Utilities and growth stocks at the same time are making all-time highs. That is a market with incredible breadth. So the people who look at internals or the economists that try to use internals to make their case for being bearish, there's no argument there anymore. It's gone. Even the transports, new 52-week high for the Dow Jones Transportation Average, huge week, up 2.8% in the transports. I want to talk about the Russell. The IWM had been lagging. This is another thing the bears have been pointing to. Oh, it's all large cap growth. Well, not anymore. Outperformed the S&P by 100 basis points this week. Last but not least, home builders all-time high. You mentioned this dichotomy, or Steve did, where the industrial data is not matching up with the the home sales or home building data. Let me give you a hint. If there's one thing to pay attention to and one thing to ignore, pay attention to the home builder data, ignore the industrial stuff, because this is a consumer-driven economy. If you've been following what the consumer is doing, wage growth, same-store sales, et cetera, over the last 10 years, you've largely been bullish. If you've been focusing on things like individual city ISMs, like it's 1965, you've been bearish on the market, not making money, probably losing clients.
No, but let's
when those
put it
two
this
things
way.
diverge, watch the consumer.
So there were probably reasons where if you were looking at, say, the foundation of the rally, right? Let's take the foundation of the rally. Trade had you pulling bricks out from the foundation. The Fed at
Only if that's what you do.
Hold on. The Fed, got hostile, if quote unquote, for a little while. That had you pulling bricks out of the foundation. Some weren't sure whether the foundation was going to hold or whether it was going to topple because of those factors. Now, I think the overall point is, if you take the Tepper commentary, is that you've got the bricks back in, and now you're not so worried about those major things. The trade issue is at least stopped bubbling up. The Fed is adding liquidity into the market.
I don't think
the foundation is solid. I don't think you can ignore it. It was a little creaky.
We're saying that, but the data is the opposite. So we're saying that there were trade concerns, but all of that was in the headlines. What happened in the market is that multiples went up between 50 and 100%.
Right at the same time when earnings went nowhere.
Listen,
but that's my point. So nobody was really concerned about trade tensions.
May and August, people were very concerned.
But not in terms of what they were doing, just in terms of what they were saying.
I applaud what you're doing about being rules-based, and I'm not arguing about that, but we also can't argue that May and August of last year stunk.
Did multiples appreciate at the fastest rate since the 1990s last year, or did they not?
Were May and August
it's a yes or no question.
Markets?
It's a yes or no question.
Wait. Look, the issues here that we're saying are positive.
Expand when people are genuinely worried or not really?
Listen, I'm telling you what you have to look out for going forward.
No, you're trying to correct me, but the data doesn't lie. So people might have said in public they're worried about trade tensions. With their dollars, they bought. With their dollars, they bought.
All the time.
Yes, they were.
They weren't.
How many breaches of the S&P 500's 200-day moving average were there last year?
Listen, you're mistaking the last 3 months of last year for what the whole year was.
No,
okay, May and August were not good times, and they were precipitated by bad trade news. And my only point on this,
by the halfway point of last year,
my only point
we were already up more than the average return of the S&P.
Okay, so January and February and the last 3 months of last year were good.
I feel like you want to make a point, and then you're looking to go backwards and find things.
No, I feel like you're making a point and ignoring that it was a choppy year last year, and the reasons that it was choppy were trade.
You were 30% last year in the S&P. What on earth? What on earth would
Josh,
you consider
if you go to sleep on January 1st and go to December 31st, that's fine. If you go to sleep during that period. But if you're going to tell me that May and August were great, they weren't.
Throw up the S&P back again, please.
Who cares what happened in May and August?
Everybody cares.
Multiples expanded last year because people said one thing and did the other.
It wasn't a straight line up.
Who said it was? Why does that?
You said it was. You said
valuations it was. For valuations
you said it was. So don't say that you didn't. And let me make the point out. You hold on.
People said they were worried about trade, and they were not in reality.
Okay.
They weren't.
All right. Can he make a point?
Yeah.
Thank you.
Done.
Okay. We have a difference of opinion.
Done for the rest of the program.
We have a difference of opinion.
Just relax.
We have a difference of opinion, okay? Trade matters. Right now, it doesn't matter because everything's hunky-dory.
Nobody said it didn't matter. We agree.
Can I just finish one point, please? Okay. There are still trade issues out there. You've got a brewing issue between the U.S. and the EU that could pop up at any point in time. And at some point, if the election's not going well for Donald Trump, you can rest assured he's going to rattle his sabers at China. And if anybody's saying that doesn't matter, fine. I totally disagree with that. I think it matters a lot for the stock market.
Weiss.
So here's what I'd say. The dialogue has changed from trade. And the market had a first, I'd say 2/3 of the year that were kind of rocky, up and down. Yes, multiples expanded, but we're talking about a few stocks. But that's just the facts. The market was choppy. But the dialogue has changed from what could disrupt the market to everything's okay now. Is the market too high? So that, to me, is the conversation that you have to have.
We are having it.
Right,
in fact,
right.
Remember what Jeremy, let's listen to what Jeremy Siegel told us, right? It was a week ago, not even?
Yeah.
Here's Jeremy Siegel as the market was on the precipice of 29,000, the Dow.
I'm just a little bit worried that this is becoming a momentum-driven market at this point. You don't know how far it'll go. Certainly no sign of a break right now. Right now, I see that momentum play that getting me a little bit worried. Again, long-term investors, I don't say keep your positions, but I don't see this sort of run continuing certainly throughout 2020 and maybe not even through the quarter.
So the momentum won't continue through 2020 if we don't start having earnings go up. Doesn't mean the market doesn't go down or goes down a lot. It just means that the same type of price appreciation is unnatural, right? Because it's all driven by multiple expansions at this point, and that's an end game at some point. However, I like the backdrop. I love the backdrop, and the companies that I'm talking to and the ones I have in the portfolio, they're doing quite well. So what am I going to do? Sell because I'm worried that the momentum's gone on? Of course the momentum's gone on.
And the momentum...
And then Shannon.
It should be pointed out. The Journal did a story about this week. Actually, we are now approaching the 5th longest stretch going back 50 years without a 1% plus or minus day in the market. This is a very, very slow grind. A momentum-driven market, like historically, has been something much more fast-moving. I know people feel like it's a runaway train because we go from Dow 28,000 to Dow 29,000 inside just a couple of weeks. I understand that.
It's an insignificant move.
Correct. The percentage gains are this is not like going from 10 to 11.
Right.
The percentage gains are shrinking as we do that. So if you look at rolling 30-day absolute move, so both up and down, actually, this is one of the slowest moving markets with the least amount of volatility that we've seen in a very long time. So it feels like it's a new record every day. The gains are incrementally very, very small from one day to the next. It is not quite a race for the roses where you would say, this baby's going vertical.
Is it, though, Shannon, a fair question to wonder as another stock, Google, joins the $1 trillion club, whether some of those stocks, the big momentum, mega cap tech names, or communication services, however you want to call them, are too crowded?
I think that if you try to find a bear out there, the one thing that bears will point to right now is that, can we continue to have a year like last year where we were driven by multiple expansion? Can we do this without meaningful earnings growth across a broader breadth of companies? And I think that is going to be, sort of the rallying cry as we go through this first earnings season of the year in looking at the potential for what does earnings growth look like this year? Because that could be the one thing that if you wanted to be bearish or you wanted to be more conservative or you were feeling that you wanted to have some justification to trim your equity exposure, it would be that we probably need to see at least some earnings growth this year because we're likely not to get the magnitude of multiple expansion that we had this year. And so from that perspective, if you think about those names that are driving the market from a market cap weighted perspective, that they've driven a lot of the multiple expansion, and therefore there's a concern.
So the 5 most valuable U.S. tech companies now account for over 17% of the S&P 500. That's up from 11% in 2015. Is that how should we put that into context?
So the fundamentals have done pretty well. Google, as a matter of fact, has not been a momentum stock. I sat with it for 2 years when it did nothing. So now to me, it's just playing catch up. But look, the fundamentals, they're pretty strong. Fundamentals in Apple are not strong today. They're not strong a year ago, but they are going to vastly improve. So look, I think it's a function, personally, I think it's a function of passive investing and indexes, that they're the leaders in the index, and the bigger get bigger as money comes in. And you see it happen more and more of the time. So whether it's 80% is algo trading, whether it's all index, the facts are that's what's driving the market. So the bigger can go there, which creates value elsewhere.
And one of the points you're making there is that they're not all the same. So Apple has run up 110% in about 13 months. Google, as you just pointed out, has not, and it's up about 35%, most of that in the last 6 months. Right. Amazon has had a recovery. So the FANGs or the FAMA or whatever you want to call them, but they're not operating in lockstep. I mean, Amazon and Google seem to have more room to run here. I'm not in Amazon because I just can't on a valuation basis. Google, I'm in. Apple, I trimmed. Facebook has done well as well. NVIDIA, some of these other names that have run, what I'm saying is they're not all moving in lockstep. Something like Apple or an NVIDIA seems ripe for a trend. Amazon, Alphabet, no, let them run.
I don't buy the argument that the popularity of indexes and ETFs is forcing a certain group of companies to be the largest in the country. They're the largest in the country because they are taking the most market share across the economy, not only in the U.S. and in the world. If your argument is that anything that's in the top 10 of the S&P is automatically going to go up when a lot of index fund money comes in, then you'd have to tell me why GE has lost $180 billion in market cap after being in the top 10. What happened to Exxon? Why isn't Chevron on the top 10? So we have turnover in the companies that are the most important. Yes, those companies do benefit from flows into the Qs, into SPY, but there's a reason why they are the highest weights to begin with, and that is being set by active managers who have chosen to buy those stocks. It's not like, oh, great, we're a top 5 stock, now every dollar into the S&P means our market cap goes higher.
Here's why I disagree with you. You're talking about GE, you're talking about IBM. At some point, fundamentals matter. When fundamentals get that
totally
bad,
agree. We don't disagree.
Right? Apple, you can't tell me Apple's where it is because of the fundamentals.
Why is it where it is?
It's down there because it's a brand name stock. It's what indexes go into. It's what people go into because they recognize the name. Tim Cook got paid down last year because he missed his targets. That's not generally the sign of a stock appreciating on fundamentals that have occurred. Down earnings, down revenues. What's doing it? Money's coming into the market. Money's coming into the indexes. So we won't know for sure.
But why doesn't that benefit? Why doesn't that benefit all the name brand stocks to the same degree then? Well, that's all that's driving it.
What percentage of the indexes is an Apple?
What if people said? I used to think about Apple as a consumer electronics play. Now I realize it's actually both a consumer luxury brand, it's a staple, and it's a services play. And as a result of that, I feel more comfortable between the cash return in the form of the buyback and dividend. I feel more comfortable to pay 18 times for it versus the 12 times I might have been willing to pay when I thought it was just iPhones.
And what if I said
Isn't that reasonable?
What if I said to you, show me another stock in history, okay, where the multiples doubled, okay, or gone up 60%.
It's doubled.
When doubled versus the fundamentals declining. The earnings and revenues
I don't know that I could say. I don't know that I could.
Exactly. So what drove it?
What drove it was people wanted to own the stock.
Well, no,
not indexes.
People want to own stocks.
Not indexes. People want to own Apple. People want to own Apple.
It's going up. That's a mystery. Is that rules based?
Well, there's a buyback.
Right.
Okay. So
I can give you. IBM bought.
That has nothing to do with the index.
IBM bought a ton of stock back. Okay, where'd they buy it? At $250. Where's the stock now? Half of that.
Okay, but
buybacks don't always drive stocks.
That's an anecdote. I'm saying that Apple is benefited by a massive buyback. You wouldn't argue with that, would you?
No, I wouldn't argue that any stock can benefit from massive buyback.
I'm not sure where we disagree. I feel like you just wanted to engage with me. It's cool.
It's on the ETF issue. That's where you're disagreeing. All right, 11% of the
$90 billion came into index funds last year.
Hang on a second. Hold on. Okay.
They didn't all go into
Hold on just 1 second. I'm going to say this, and I'm going to say this for the last time today. Okay. Our viewers on Twitter are telling me what I tell you all the time. Just make your points individually, okay? If you argue with each other, over each other, no one can understand anything, including me.
Good point, Judge.
Okay? Please.
Okay. Look, this is just the numbers. 11% of the triple Qs is Apple. 5% of the spiders are Apple. Okay, so look, I'm with Steve on this. A dollar comes into any of those things, it goes to Apple regardless of what the fundamentals are. And we know the wave of passive has already overtaken active. I mean, that's a factual statement. We've got JP Morgan saying that 80% of what goes on in trading in the markets is quantitative, and most of that is ETF basket trading. It seems unassailable that this is ETF in large part driving that.
It's unassailable, though, until you see the numbers. $90 billion in net flows came into index funds last year. Apple makes up approximately 5 to 6% of the S&P. Apple's market cap went up to $1 trillion. It's not from the 3 or 4 billion in net assets that went into SPY, the Apple proportion. Mathematically, it cannot be that index funds push this stock to a $1.1 trillion valuation by themselves. Cannot be. Cannot be.
Nobody's disagreeing with that.
All right, cool. Here's what else is coming up on the halftime report.
the social media showdown, an upgrade for Snap and a downgrade for Twitter, our desk debates and call of the day. Plus, Pete Najarian joins us for his latest trades and unusual activity, the new bets he's making based on moves in the options market. The halftime report with Scott Wapner and the traders is back in 2 minutes.
This ain't just lunch. It's the KFC fill-up lunch for $1.99. It's mighty fine. Tingles your spine, so jump in line because it's time to dine on a mini fillet burger, 2 hot wings and fries, all for a fist-pumping $1.99. What the KFC fill-up lunch every day until 3 p.m. at participating restaurants every day from 2nd to 26th of January until 3 p.m. only, subject to availability.
Right, I've got the phone bill here. Lucy's school friends, 3 hours. Dan, 5 gig on mobile games. And who was on the phone to my brother until 3 a.m.?
Nigel, I think we need to talk.
Get control of your finances. Don't miss the Sun's money-saving series. 5 tip-filled pullouts to help you manage your money. Starts this Saturday only in the Sun.
Do you remember when it first started?
Here at Tesco, we're celebrating over 100 years of great value with even more great prices that take you back. Like a 6-pack of apples from 69p to just 49p. All this week at Tesco.
Selected larger stores subject to availability. Offer ends 20th of January.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back. As you can see, Slack shares are falling down about 2.5% on news that Microsoft will launch a major new ad campaign for Teams. That is its Slack competitor. That'll be launched this Sunday during the NFL playoffs, and they'll include TV, podcasts, and digital ads. Now, this also ramps up the battle between the two work communication apps, which have gone back and forth on this rivalry. Slack CEO Stuart Butterfield has expressed some skepticism on how Microsoft calculates its Teams daily active users, last at 20 million in November to Slack's 12 million in October. Scott?
Dee, appreciate it. Dee Bosa out in San Francisco. I like your comment on that, Josh. You still own work, don't you?
Yeah, this is going to be an ongoing thing from Microsoft. They are very aggressively pursuing this idea that they're competing head-to-head with Slack. And in some respect they are, but in some respect they aren't. A lot of what they do is bundle the user data from other Microsoft programs like Office 365, et cetera, and they say, well, those are logged in Teams users. The reality is that engagement is significantly higher for Slack users and for Microsoft, people that have access to Microsoft at Fortune 100 companies and also have Slack, which I think speaks to the popularity of Slack. That being said, yeah, it's going to be tough. It's going to be a dogfight. And there's no way Microsoft is going to let this company run around saying, we're going to eradicate email as we know it. That is the franchise Microsoft needs to protect. And so that's what they're going to use these Teams announcements for, to try to marginalize Stuart's company. I don't think it'll work long term. It definitely has an impact on the stock short term.
You're still in the stock, though, and thinking longer term.
No, I might even be adding to it soon.
Yeah, okay, so. That's why I wanted your opinion on that. All right. Well, UBS is upgrading Snap today to buy. They point to business momentum in 2020. The shares are up 5%. It's our call of the day. Snap was up 229% in the last year. Wow. What do we think about this? Never gets talked about.
Yeah.
Doesn't get any respect.
So if I had to declare last year, and I did, and I haven't been involved, I would have shorted it, right? So that would clearly have been wrong. But the reason I didn't get involved in, and I don't get involved in Twitter anymore, is because I can't figure out, I can't analyze the business. I can't analyze what's going on. You know, I could look at the sites, but I really don't know what's going on. And I don't think anybody, the companies can really tell me how the business levels are going. So these are just not my kind of stocks. You know, Twitter was good, it was bad. I probably on balance lost money. I'm just skeptical.
I think that this stock was just left to die because, you know, to Steve's point, I think that the management team didn't do a great job of explaining for a couple of years there how they were going to monetize the advertising through stories. And I think that this is, this is really a clear example of everybody seeing that other apps have been able to monetize, and so this is the next one to come. And so these, revenue targets are based on, I think, a realization that perhaps, there has been some progress made at Snap, but, I really think it's just an expectation that these will continue. This type of advertising will continue to do well over the next several years.
The technicals that you look at, how do they look in this one?
They look great. I still don't want to own it. I agree with Steve. It's very tough to figure out what's going to drive the business long term. And I would just point out, Snap is a utility for people in their 20s, but it's basically a competitor to WhatsApp. It's text. It's really good. It's really good at that. People have their whole social graph already there. They don't want to stop using it. It's really easy. The idea that they're also going to make money from stories, though, has been thrown into question for two reasons. Number one, Instagram is eating their lunch in terms of mind share, market share, et cetera. And number two, TikTok is coming like a Category 5 hurricane for the audience. Now, TikTok is selling ads, making a lot of money already. It's owned by a Chinese company. It's not quite the same exact thing as Snap. People aren't messaging each other to the same degree. But people are watching content on there like there's no tomorrow, and those numbers are doubling and tripling, it seems like, every month. It was the second most downloaded app in the United States in the fourth quarter of 2019. That momentum will work against Snap as that audience grows and people spend more of their time there.
All right, the other part of this call, the other half of it, if you want to call it that, is Twitter downgraded to neutral from buy, maybe a little late. Target cut to $35. Target stock's right below 34. And word, I don't know if this is a report or whatever it is, that apparently Jack Dorsey asks Elon Musk how to fix Twitter.
So if I hadn't sold it already.
Now, maybe he told him just to tweet out that
I like what Elon told him. He said, you have to clean up the bots. Totally agree. You've got, now I don't agree that that's the only issue with Twitter. There are many, but I do think that you've got these roving hit squads. Some of them have ulterior motives. Some of them are from overseas. Some of them are targeting specific people. As long as you have that, you will never be able to compare the user experience of Twitter to Instagram. You just never will.
You know what you can compare? You can compare the performance in the communications sector of Twitter relative to the others, where communications sector is at an all-time high, and Twitter has lagged it, dramatically by this wall graphic that we're showing you now. Comm services all-time high. Twitter's just been left behind. It's one of the reasons why you threw up your hands in the air and said, I'm out of here. It's just like,
yeah, I was waiting for. I spent a lot of time in the stock. I was wrong. I still want it to succeed. I still love the platform. I still feel like Twitter has given me way more than I could ever give it. Professionally, I think it's great, but there's issues, and I don't know as a shareholder that I want to stick around and watch them ask Elon Musk how to fix it.
Right. All right, well, let's get the headlines with Sue Herrera. Hi, Sue.
Hello, Scott. Hello, everybody. Here's what's happening at this hour. President Trump's legal team will include former Harvard University law professor Alan Dershowitz and Ken Starr, the former independent counsel who led the Whitewater investigation into President Clinton. White House counsel Pat Cipollone and Trump personal lawyer Jay Sekulow are expected to have lead roles as well. The Louvre Museum in Paris was closed today as dozens of protesters blocked the entrance to denounce the French government's plans to overhaul the pension system. The Leonardo da Vinci exhibit marking the 500th anniversary of his death was also closed. Multiple schools were closed in Nevada with heavy snow falling across that state. The snow causing roads to be slick and icy, making driving conditions really dangerous. Blizzard warnings have been posted for the upper Midwest. And get a load of this story. An amateur golfer had a hole-in-one during a PGA Pro-Am tournament on Thursday. Laurent Hurtubise, who was born with one arm, teed it up on the 151-yard par 3/4 and rolled that ball right into the cup. Amazing. And everybody, of course, cheered him on. You are up to date. That's the news update this hour. Scott, back to you.
Wow, that is insane.
It's great, right? I like to look for really happy stories.
Yeah, that's unbelievable.
Crazy.
You ever had a hole-in-one?
I did. And I had a double eagle.
Whoa.
14th hole.
I just asked you about a hole-in-one.
Tepper had a hole-in-one when I was playing with him this summer, actually.
Well, he's scoring all over the place.
He is scoring. Yeah.
All right, we got more on Twitter coming up. Pete Najarian joins us. He's got some unusual activity in that. We'll do that straight ahead. And a reminder, you can always watch or listen to us live on the go on the CNBC app. We're back after this.
I love the new My WW program because it's...
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30-gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Fasten your tool belts and get to TradePoint. 20% off power tools ends this Sunday across big brands like DeWalt and Makita. And if you have loyalty discount, you'll get this on top. Don't miss 20% off power tools at TradePoint. Excludes DeWalt 18-volt 4-amp combi drill, Dremel 3000 15Ps and power tool clearance. In-store only on 23rd and 24th November, subject to availability.
On the goal line, scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
A move, and a shot, and he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Puts his head down, crashes, and the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown.
Search NFL to never miss a moment of the action.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
We're back. Twitter under pressure today from the downgrade we talked about by UBS. The shares are down 10% in the last 6 months. Now, options bulls are looking for some upside. Pete joins us now from Minneapolis. Pete, it's good to see you. I wonder why they think this stock's going to turn around and, reverse itself.
Right. Well, I can go back to November, Scott, and that's when we started seeing bullish activity when the stock was 28. Then we saw it again when the stock was trading 30. Today we're seeing it again. And when you think about this downgrade that they got today, Scott, it's barely moving the stock at all after a pretty nice run since, I think it was November where we were talking about $28 a share. Here we are at $34 a share. What they're doing today is aggressively buying, but they're only 1 week out. And as a matter of fact, it's hit twice today alone. So they're buying the 34s. Now these expire next week. Both the 34s and the 35 calls are being bought. January 24th expiring. About 4,000 of each of those. The first one, the 34s, cost a little bit more. They're about 45 cents. The 35s are trading for about 30 cents. So we're not looking for, at least the option world is not looking for this stock, this huge run and this continuous run, because they're right on top of it, buying the 34s and the 35s.
You know why?
I love this kind of a trade, though. Yeah.
You know why the stock's not moving? Because no one believes it. No one believes this thing's going to start going again. And, look, it comes on the same day as Josh was talking about. Dorsey's asking Elon Musk how to fix his own company.
Right. No, I understand all the commentary in the background, but Scott, you can't really deny the November move up to here, and why couldn't this potentially move even a little bit further? I mean, if there's some negative news out there, if this is downgraded and the stock's down 30 cents, about 1%, give or take, or something like that, that is not what you'd expect for a stock that's made a pretty substantial move in a short period of time. So that's what makes me very interested. I love the risk reward here as well. Now we've got eBay as well, which is it's hit 5 times this week. Every single day this week, we have seen eBay call buying. The stock's up about $1 for the week. That one makes it pretty interesting as well. And on Wednesday, they were buying the 35.5 calls. Stock's trading around 35.5. Today, they're buying those exact same calls that expire next Friday, the 35.5 calls. So looking for this stock to make a little bit of a move to the upside. These, again, are very inexpensive options, but I love what we're seeing here. A lot of aggressive buying this whole week, every single day, Monday, Tuesday, Wednesday, Thursday, and today. So I like this. I'll be in these both for about a week unless they move a little bit faster, and then I'll start trimming and getting out quick.
I got you. All right, good stuff. Enjoy the weekend. Enjoy the football games,
man.
Pete. We'll see you next week.
You as well. Watch out for the Titans, man. Those guys look pretty good to me.
Yeah, they do. They definitely do. I wouldn't bet against them, but who knows? All right, Pete, thank you. Josh, just give me one more comment on this Twitter thing. Okay, so there's a short-term bet. Yeah, could the stock go up over the period of a week? Of course.
My bias on the show is always what is the data or what is price doing? Because only price pays, and price is the truth in terms of what people are actually doing. Commentary is not the truth. So to Pete's point, you get a downgrade from a large firm covering the stock, and the stock is flat or barely down. That's more notable than anything the analysts had to say. That's number one. And number two, if there are bulls in the options market, you have to assume if they're making big bets, they're not randomly spraying. They have a reason for doing that. Doesn't mean they'll be right. But yes, I'd much prefer to pay attention to call buying, to price action, to the reaction to news than somebody's opinion putting out a research report. So I hope the stock goes up, quite frankly. All right, hope it works.
All right, good stuff. Coming up, Ask Halftime. That's straight ahead. We've got Coca-Cola, Caterpillar, Micron, and more, and we'll do that in just 2 minutes.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and